market's really taken the reins this year. And I don't know that that's a passing theme. You got to be careful, though, because it's happened a lot where you get Chinese stocks get a good start and then it fizzles out. We've seen this story many, many times for the Chinese stock market. Why should it be different this time? Well, there's a couple reasons I would say there's a good chance that you get other markets starting to lead. You have a change in administration that seems keen on ending what's going on in Ukraine and Russia. Regardless of how you feel about that or what you think about that, if that happens, there's probably a little bit of a story here for the DAX stock market where they, for a little while at least, kind of embrace that, okay, we can shrug that off and we can get back to doing other things. That could be a theme. The other thing that's probably even more relevant, in my opinion, is just relative valuation. U.S. stocks are really expensive. Tech stocks, you are paying a premium to get U.S. tech stocks. Other places still have great value companies that can be great pickups. And you have to think, obviously, like Meta is an exceptional, incredible company. But Google, Meta, Amazon, these companies can still be priced too extreme and the expectations can be too high. Meanwhile, you could go find some oil and gas company in Brazil, and maybe I'm forecasting here on accident, but maybe there's like a stock out there in Brazil or a certain market or Chinese stocks, Chinese tech stocks that have so much potential value and they're just trading super cheap. And people say, okay, let's move out of US and let's move into other places a little bit. Even if that happens on a small scale, percentage-wise, people are so overweight US equities, that redistribution of money into other places could create massive outperformance for other places. I mean, it's crazy, but that's what being a contrarian, and we'll have Chris Pulver in a second who's going to take over the show. He's a great example of somebody who's quite contrarian a lot of the time. And it can be very, very rewarding when everybody is kind of burned into my brain at this point when Chris Pulver was very bullish on the Japanese yen. Some of you guys were probably watching the show at that time. And I was sitting there, I was like, Chris, I don't see it. And nobody saw it. That's why when the Japanese yen had that huge run up and Chris was already positioned in Japanese yen, he did quite well with that scenario. So, sometimes being a contrarian can lead to some really excellent risk to reward if you are right. And that's the cool thing about, maybe European stocks, which are like hated in the last 10 years, maybe there's some room there. Maybe Chinese stocks are going to finally have a rip. But as a trader, looking for the momentum, signs of reversals, looking for breakouts, that's something I'll probably be doing this year. Hopefully that helps, guys. I'm gonna wrap it up here. My segment is over. Just a reminder before I step away, we're doing an Edge Finder giveaway. If you want a chance to win the Edge Finder, all the information will be dropped in our Telegram channel in just a few moments. So please take a second to subscribe to our free to join Telegram. We'll drop the link here in the chat. Up next, Chris Pulver is going to take over the show and speak a little bit about what he's seeing in the markets. Stay tuned. We'll be right back with Chris.
2025 is here, and to kick off your new year of trading, you can get access to our free A1 Trading Telegram channel. Inside, we share Edge Finder data, free trading courses, market forecasts written by our in-house traders, and free trade ideas on Forex, indices, gold, and more. And if you're more into the stock trading world, we have a whole Telegram channel dedicated to just that. Start your new year off right by joining the A1 Trading Telegram channels completely free. Links can be found in the description and in the live chat. Now, back to the show.
Good morning, everybody. Happy Wednesday. Welcome to a pretty quiet day. I was actually looking at a move on Meta, trying to price something out. Similar to what I did on Netflix, that I have an expiration out for next week. So Meta has a pretty ridiculous bar count. It's over 500 bars since we hit the 200 moving average. I'm going to look at a broken wing butterfly or something up here to say that I don't think Meta can come back up and revisit the highs in the next week or so. I was looking at some seasonality for March and April. Typically, March and April is a bullish time for stocks. February is offering a bit of a pullback. We haven't seen much of a pullback. We're just off of the all-time highs with this week's. I mean, we've had light trading, obviously, this week with just Tuesday, but I've got a chart alarm set, at the high at the low. Yesterday's little like 5-minute surge at the very end actually pushed the SPX up to an all-time high, SPY to high number 3 of the year. Nasdaq yesterday did actually poke the highs. So we have noted a couple of all-time highs in the markets. Now, it's a major monthly expiration on Friday, the 21st. I don't think that price is going to stay right here by Friday. So I think we're just bracing for some movement, whether it's up or down. I don't know. The market clearly has shrugged off DeepSeek and tariffs 1, 2, and 3.0. Trump's making regular appearances on the economic calendar now, whether he's speaking by himself, whether he's doing some type of press conference, whether he's got Elon Musk with him for Doge. I don't know. But I've got a big level this week on the SPY at 615. I'd like to see if that's going to be hit. We're staying pretty resilient on it today. And I was looking at a trade on Meta this morning, down to 696 from the recent highs at 741. So here's what I was looking at considering a broken wing butterfly. If I did a 745 by 750, and then I created the kind of the skip strike of this, I'd go a little bit wider on the skip strike. But that would mean that if we were to be proven right on this trade, then I would like to get filled for like $1 on this one instead of 45 cents. If I get filled for $1, I consider taking that trade. I've still got some risk in it, but this would require Meta to go back to all-time highs again by next Friday. Not saying that they can't, not saying they're going to, but probability is fairly low that that will happen, especially if there's some additional flows heading to find these dynamic moving averages lower. So I'm contemplating if I get filled for 45 cents, that's acceptable. Make 45 cents a contract. I still have a profit trap of around $5. And so if I pin this thing, around 740 or 742, that's the previous all-time high. If we fail at those highs, I still make money. If we go a little bit higher with the poke, I still give myself about a $9 buffer, and that would give me a $5 profit trap by next Friday to pin this thing. There's still risk in the trade. It's about 1%. I think I'm willing to take this trade. If I go a little bit lighter, wider there, like that's a bigger risk. So I think I'll keep it under 1%. Like I said, I was going to try to get filled for $1, but if we end up falling lower, this just gets less and less credit. So let me see if I can take this trade for 45 cents. 45 cents. Let's see if we get filled. 45 cents pending. 44 cents. All right. I'm not going to take less than 40 cents on this trade. All right. It's got filled for 43 cents. All right. So I'm going to add this in to the stock options section for my Pulver alerts. This will be a new trade. Meta, 228 expiration. Buying the 745 call. And then selling the 750 call with 2 contracts to create a broken wing butterfly, and then buy the 775. 43 cents credit. So this is a broken wing butterfly. I'm just typing this up right now. So if I show you the parameters there, we've got about a 94% chance of profit on the trade. Looking at a 43 cents credit. I've got a $543 pin plus profit trap. And my max risk would be 1957. And price would have to be greater than 775 for that to be max risk. If price closes at 550 or 750 rather, if price is less than 745. All right. So I'll craft up the strategy right here. Out the next week. This is on Meta. edit the spread, going out to the 28th, sell the middle. So I'm buying the 745, selling the 750. And then the 775. All calls. This is the trade right here. So is there risk in the trade? Yes. This is what it looks like though. Price stays exactly where it is. I make money. Price goes down further. I make money. Price goes up a little bit. I make money. Price goes up to retest all-time highs. I'm still fine. Price goes even higher. This would be $9 higher than the all-time high. I can get this little profit trap, but that really doesn't come into play until next week. The actual P&L on the trade is here, and then this will end up matching. The risk curve will match by expiration. So if I can profit trap this thing, awesome. If I just keep it as is for 43 cents per contract, that's fine, and I'll keep an eye on it. But that's the trade. So I'll post that in Pulver alerts. There's my risk graph for Meta. There we go. And there we go. Okay, trades in, trades posted. I'm going to add this into my personal tracker as well. 228 expiration. Buy the 745 call. Sell the 750 call. Buy the 775 call. All right, let's move on. So again, price action's pretty quiet. If you want to write a number down, write 615 down on SPY. That was a really silly way to close out the yesterday, but it is what it is. It poked the highs. We pulled off those today. 615 is still a pretty good liquidity level from what I'm seeing. And I'm going to look to see if the markets can directionally hunt for that this week. So if we take out this high, make a directional move towards 615, that's what I'm watching on my liquidity levels. This has been growing a little bit, not as much, but it's still pretty notable. I mean, anytime I get my liquidity levels up into the 1,000 plus current net, then I'm typically looking to flow towards that level. So directionally, I do have a 611 by 612 debit spread on this. And if we get to my strike price this week at 615, that'll be a nice little winner. We've got some earnings to keep an eye out for this week. Earnings on Carvana, Wayfair, Toast. I think one was ENVX is another one. So I took a couple of trades on earnings this week. Let's just go top down here. Let's get got chart alarm set on SPX. Let's go top down here. I still am like very cautious on the market. Cautiously bullish, yes. I'm a little skeptical of like blowing this top off. I'm looking at these kind of volatility expansion moves. There's actually maybe a dozen that I'm really interested in. I do think that the SPX is looking primed for some type of volatility expansion. I just don't know if it's going to be bullish or bearish. I mean, we could have the market poke the highs and then drop. You saw this happen on Google. So this is an example of how this can play out. We can see some type of volatility expansion like this, where price is really sideways and it blows the top off and then corrects. But it just shows that this market is going to have to release some type of energy, some type of volatility, and it can go either direction. Okay, so going back to SPX, we do show that here, that it's primed to make some type of move. I still am watching very carefully for a correction back into these dynamic support levels. This bar count, in my opinion, is going to be hit with like this. To me, is acting now as like a magnet, right? So, I want to see price that finally supports a move that will get us back into the 200 moving average. But what it also means to me is like, even if this market is trying to go higher, this moving average will go with it, right? And at some point, it's just going to get harder to get stretched away without having some type of elasticity back to it. So that's all I'm saying. Like I'm until, and I probably won't be like a happy bull until the markets give me the pullback that I'm looking for. That would include the SPX, which your correlated instruments, your SPY, your XSP, even ES for futures. I mean, I'm just looking to see, like, give me something, give me a dip to buy. I don't know if the market's going to give it to me the way I want. It might be, waiting for ever. It might be waiting for, or actually getting like some big surprise, like, I don't know. We might have like an August 5th example where the market drops like 10% in 3 days. Who knows? But I'd still be waiting for opportunities to buy some pretty serious dips because I think the technicals are really good. So same thing on the Dow. The Nasdaq has had tons of closes above the 200 moving average, but it's still been tested a couple of times, so it's not quite the same. But if I've got these bar counts on the S&P and on the Dow, where this red line hasn't been tested for a while, I just think we're going to hit it. So I think there's limited upside, even if we have a bit of a volatility expansion. This will slowly work its way up, and something tells me that we, maybe work our way back down and fade. So I'm just really skeptical on how high and how bullish the market can get. I caught the tail end of what Nick was saying on, other countries performing well. I think that is the theme for this year so far, is that Europe is doing really well, China's doing really well, Brazil's doing really well. Japan is the only one that's really not moving a lot. But you're getting money that's flowed into this, like, 3 standard deviation outperformance by the US. You've almost had like a decade worth of outperformance, certainly since 2022. The US has been killing it and really holding up the entire global economy. And, a lot of money has flowed into the US. But historically speaking, at the valuations that we're sitting at with the US price to earnings, price to peak earnings, those levels are historically high. So they're matching levels we haven't seen that we saw those in the past. Were matching levels that oftentimes led to a correction. But at the same time, I say all this, and this market, as we have seen, can do an incredible job of climbing the wall of worry. So everyone that's worried about a recession, look, I think the recession probabilities have gone way, way lower. I don't know what's actually going to lead us to a recession unless something, like, I keep saying this, but something's got to break, and I don't necessarily see something breaking yet. So anyway, bar counts, limited upside. I'm still cautiously bullish. I'd like to buy more aggressively on some dips. Those dips happen to come in around this 144 to 200 moving average. And I just have some levels that I'm just going to be really mindful of. So, considering the markets haven't really done much other than go up, we're up 3% for the S&P or 4% for the year. I'm out with about a 7% gain so far, which I'm pretty happy with. And I haven't really traded anything directionally. The only thing I'm trading right now directionally is I'm still hanging in there with gold, and gold has poked another fresh all-time high. If silver is going to follow along with it, hopefully silver just makes some traction up towards this $36 handle. I'm long on natural gas this year, which has been a pretty good trade. So long UNG since the teens, but I also do a diagonal spread where I bought like a really deep in the money call. I think I have a 5x23. So it's for an $18 wide diagonal spread. I only paid $11.25 for it. I'm up a decent chunk of profit, and I'm going to see if I can max this thing out at $18, which is by April, which is still time in the trade. But basically, if this instrument is greater than 23, then I'm maxing out at $18, which gives me about $6.75 a profit per contract, which is not too shabby. So I am long natural gas. I am long gold. I'm long silver. I'm still dollar cost averaging into Bitcoin, which I think is an accumulation phase right now. Bitcoin still has room to, I think the dip would be bought pretty aggressively. If we do see a dip down to like, 85K or even 79 to 80K, I think that we have like a long wick in the market, buys it right back up, and we're going to revisit highs. If this is in fact an accumulation phase, here's what would be fairly exciting about Bitcoin. If the U.S. markets, S&P, Nasdaq, Dow, even the Russell plays catch up still, if we're hitting all-time highs on those indexes, Bitcoin getting greater than 109, I think the next move is 125. If we really get an exciting run, maybe 150. So this is why I'm still accumulating, just like I did a lot for months before the election last year. and that obviously paid out pretty nicely. So I think they're tied together. They're interrelated. They're correlated. If we don't have risk appetite in the overall U.S. indexes, we're not necessarily going to have big bullishness on Bitcoin. So if you're cheering on Bitcoin, you're probably wanting to cheer on all-time highs in the U.S. markets as well. I don't think you can have this doom and gloom bearish on the U.S. market while also being bullish on Bitcoin. I don't think it's going to work that way. Okay. But anyway, I'm accumulating. So I did add in some more income trades. I think I added this in yesterday. 46 by 45. I did a ratio spread, collected about $1 credit on that one. And if I take any assignment, it would be on IBIT around $43. So I've got some credit spreads out to the end of the year. I've got some diagonal spreads. I own some shares. And again, just an accumulation phase on Bitcoin. Gold and silver looking pretty good. I'm staying out of oil for right now, but I am long natural gas. I like natural gas quite a bit. UNG is the way that I'm expressing that. Diagonal spreads working out pretty nicely. Elsewhere, MicroStrategy. This is, I did a roll on this yesterday out to May. I just needed to stay above 310, but I've lowered the cost basis down to 269. So overall, it's pretty good income there if I just keep working through it. Coinbase added a, what did I add here? Coinbase, I think I added in, just checking my tracker here. 328 expiration. Yep, 205, 200, 195 for $1. If I took some ownership, I'm willing to own it, repair it. Ethereum, still really sideways. We need to get on the right-hand side of this trend line, which probably just requires time. Copper got the fill that I was okay with. I was preferring a trade in copper back down below these lows. I actually might look. Let me take a look at copper really quickly. Maybe back down here towards like $4. Let me take a look at copper. So copper here, if I went out to April, let me see what my current expiration is on copper. So I have copper out to April 24th, so I already used that one. This is, yep, there's my 1-1 trade on copper. All right, so I already have this one. I'm going to see if I can set up a similar trade. I don't know why it's not showing me my position, but there it is. Okay, so here's what the trade looks like. If you can see my profit graph, it's, as long as price stays above 4.2, oops, let me get a yellow. If we're greater than 4.21, then I just keep the credit, and it's about $160 per contract. I do have a profit trap in this one, where if I get that profit trap, I think that is 175. That profit trap should be a little bit bigger than that. I should have like a $300 to $400 profit trap here. Anyway, I'm going to take a look and see if I can get something set up on the $4 area. So let me have a look at copper, go back to the table. 64 days out to the 24th. Let's go a little bit lower. Okay, so delta-wise, 1. So if I buy that, sell that, sell that. Let's go 4 down to 350 maybe. Oops. So that trade getting 0.0050 credit, that should give me, it's $125 of income with a profit trap of around $1,100. See if I can space that out a little bit better. 96% chance of profit on this trade. Yeah, I just don't love this. This max loss is pretty hefty. That's like a 4 to 4. That's like a 4% loss. That's way larger than what I'm comfortable with. So I'm not going to take that trade. I could tighten up the risk that way. Tighten up the risk that way. Tighten up even there. I could tighten it up. Now I'm just going to pull in less credit. Now I pull in like, $50, $60, which I'm not really interested in that income for that type of risk. So never mind. I'll just keep the trade in as is with copper. Let's take a look at Japanese yen futures. This trade's going pretty well. This was a pretty simple debit spread. I went out of the money, so my risk is under $700 for my max profit at almost 1,200. So a little bit favorable there, which I'm pretty happy with. Overall, the stock or the futures trade is doing pretty well. Here is 6J, right up around $2,300 in profit, and there's still some time. But I'm not trying to be super picky on the time here. I mean, I went out as far as I could on Japanese yen futures, and that was September, which I wasn't like stoked about. But if I go into like that's as far as I can go out right now for Japanese yen futures. I can go out to September. So I did, and this trade is paying out pretty nicely. I am trying to get if my risk is around $700, I'm trying to take some profit. If I want to take profit early, I'd like to take profit around that $700 to $1,000 window. If I max this thing out, that's 1187 if price is above that chart alarm at 0.0067. Okay, but otherwise directionally doing pretty well. Nikkei, just nobody knows what the Nikkei is going to do. Nobody knows what the Japanese yen is truly going to do. It's still the only central bank that is raising rates right now. We saw the RBA cut. We saw the RBNZ cut. We know the Fed's going to be cutting probably in July or September this year once, and then again maybe in 2026. The European Central Bank has been cutting. If you take a look at the major rate decisions over the last, let's say, let's zoom out a little bit. Over the last, let's say, 6 months. Okay, let's look at some of the majors. So Australia, they just cut this week. They cut 25 basis points from 4.35 to 4.1. Canada has been at a pretty serious cutting cycle. They are now down to 3% with their last cut back in January. Eurozone has been cutting as well. They're now at 2.75. Let's go. We go Aussie, CAD, Euro, Pound. So UK is cutting. So they just cut February 6th, cut by 25 basis points. New Zealand dollar, they just cut 50 basis points from 4.25 to 3.75. They did that overnight. And then the dollar still holding at 4.25 to 4.5. Their last cut was in December. That was where they brought it down 100 basis points in September 2024. The Japanese yen has been up by 25 basis points. That's since January this year. One of the very few central banks. I mean, look at all these red arrows. Every central bank is cutting. Japanese yen is not. Russia, Norway. It's like I'm talking majors, right? Aussie, CAD, Swiss, Euro, Switzerland down 50 basis points since December, and they're now sitting at 0.50. This is why I still like holding against the Swiss. I'm still long on those carry trades. Whether I've got to hold them a little bit longer is fine, but I mean, dollar Swiss paid out really, really well. Even though the euro is cutting, the eurozone is cutting. It's still a better and more favorable swap right now. So I'm still holding those positive swap trades against the Swiss. But every central bank is cutting. The Japanese yen or the BOJ is still raising. Are they going to continue to raise? Maybe. Again, I don't think this is impossible, but would anybody be surprised if we go to the Japanese yen futures here? Okay. Would anybody be surprised if the central bank, BOJ, continues to raise rates, that we could have some type of event? Right? I mean, this happened in about a month. So similar, or maybe it's slower and steadier, but we have a similar type look where, every central bank is cutting. Even the Fed is looking to cut, and the Bank of Japan is like, we're holding, back into positive territory in considering raising up to maybe 100 basis points. Maybe there's another 2 raises for the BOJ. I haven't heard anything as far as that goes, but they're not cutting. It's not like they're backpedaling on their monetary policy. The odd thing is their index. I mean, the Nikkei 225 has done pretty much nothing, which I consider that kind of a surprise. I thought we would, maybe bottom out, which we did obviously in July to August. So top to bottom, I thought this would be building more of like a cup and handle, and then we have more of a move to the upside. Hasn't happened yet. Just a lot of chop. So something tells me that this might also just be this. A lot of grind. Maybe this is like a multi-year range that we're going to have from that volatility event we had to 2024. Who knows? But as long as it doesn't make like a nasty spill and breakdown, I still like, long Nikkei. I think it's another non-US play, which I'm okay with. But surprisingly, this has been one index that has done pretty much nothing. DAX, finally nice to see a red candle for once. I'm actually pretty excited to buy a dip. I know this is a long stretch away move. I think this is, again, probably going to have a pullback into some type of, I don't know, there's a 21, there's a 50. I don't know how severe the pullback is, but we had a pullback in here and the market bought the dip. So if we have a pullback coming again, I'd be interested to buy the dip. I did trade FEZ, so it's probably a way I'll get positioned for it if I like a pullback or like a dip. China still hanging out near these highs. I'm hoping that we actually push higher. If we're going to a symmetry move, we are pretty close to symmetry right now, actually. But if we're starting to get above the buy zones and everything's like pointed upwards, there's still some momentum. This nice move that we had in February, like I'd say January, February, this move also is without having a lot of comments from China. Like if there's still another, let's say, sustained round of stimulus, whether it's just jawboning and supporting the capital markets and supporting the property markets, or another actual physical round of stimulus, like they're going to be going into fiscal spending, then we could probably see more upside to it. I think they hinted at it, and I don't think they're going to necessarily pull the rug out and say like we already did it, we're done, we're no more. It's like I think that a lot of countries are going to be looking at the U.S. as a recent model is like, look, how's the U.S. market do so well? Government spends a ton of money, monetary policy is pretty loose and accommodating. Well, whether it's the right way to do it or not, I think that things are going to change, and in order for countries to keep up or compete or perform well, I think they've got to consider similar policy stances, and whether that's at the fiscal side or monetary side, call it funny money, but it's worked in the U.S. And I know everyone's worried about the debt and the debt clock and whatever else, but everyone's kind of drinking from the same punch bowl anyway. So point is, symmetry wise, we're probably close to hitting symmetry here on the HSI. Okay, like we hit symmetry on that September swing. I'm actually pretty interested in this as a follow through. If we have that inside swing that I can clone from a higher low, I mean, to me, there's still some room. Percentage wise, I would say we've got another, 11 to 12% upside on HSI on the Hang Seng. I'd be okay with that. That'd put their index up from the start of the year. I know we had a dip early, but that would be a pretty nice rally. You'd see this thing up around 37%. I mean, who wouldn't consider, like, if you could trade an index to see a 30 to 40% move on the year, I think there'd be a lot of investors that would support that move and be behind that. So I'm going to go ahead and mark this as a potential symmetry swing. And that is why I still have a remainder long on China. Here's Brazil. I didn't get a chart alarm to go off. I plan on buying some more Brazil. This is EWZ. Back around these COVID lows, I didn't quite get them. And we're not done yet. I mean, this may still consolidate longer, but I think once this thing rolls out, find some lows, then we're probably ranging back up into the 30s or so. I own shares of this at like $26. So if it gets up to 30 something, great. Mag 7, here's your MAGS. Where are we going? Well, a lot of nowhere right now, which is probably a lot of the reason that we haven't had a ton of traction on the U.S. markets. Mag 7, large market cap weighted, SPY especially, Qs especially, and until this thing wants to make a move, one way or the other, I think we're still going to see some choppy direction. If we go to Mags here, there you go. Now the nice thing is this is building up a nice position where we're going to have to go somewhere, right? I do think that the large cap, it will still lift, kind of the high tide raises all ships type thing, and it will lift the market higher. If somehow this breaks down, which I don't really have a reason for it to, other than maybe this similar look to the QQQ where we've tested, trying to go back here on the moving averages. We've tested this a few times, but the last time we really closed below it would have been back in 2023. So we have another like 300 plus bars, similar to what we have in the S&P, similar to what we have in the Dow. So I could see when we're ready to make a vol play, either this is a volatility move to the upside, or I'd prefer, this is what I'm asking, I would prefer if this can drop first, right? But that's not going to be fun for anybody. That's going to be painful. So You know, I know how to survive a dip, and I think if everyone has cash at the ready, you can buy the dip. But that would be my timing mechanism to go to all-time highs. If I don't get that and it just goes sideways, 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 and this just catches up, well, then there's just a lot of lackluster movement, and eventually, you know, we do make a volatility move. So time will tell. We'll see. I would prefer to have some dips first because I've got some cash that I still like to deploy. If I don't get it, I'll be patient. Apple, not at highs, not at lows, nothing crazy there. Amazon, pulling back a little bit. I think Amazon dynamically is still really good. I'd like to look at some levels here. I mean, I've got some ownership. I've rolled a bunch. I've lowered my cost basis. Right now, my covered call is rolled up to 225. So if we don't get back to 225, then I mean, my break even on this is probably down to like 120 right now. So I've got a lot of profit on Amazon. I'm still going to hang on to it, and I'm just adding covered calls and collars. So if we came back down to this area, that's another spot to look for a nice buy the dip on Amazon. If you ask me, that's what I'm doing. I'm buying the dip. Google, I think this eventually turns into an NVIDIA type trade, which is we have this large gap right here. I believe that was that DeepSeek news that also gapped lower. I don't remember if that was or not. Or is that an earnings miss? That was a revenue miss. All right, that was an earnings play. My bad. So anyway, I do think that if we come down to some, you know, dynamic support in here, we're looking for this to base out a little bit, carve out a floor, and then we get a nice little gap fill opportunity and maybe even all-time highs. So I think Google still looks good. This is why I have some dollar cost average levels in it. And then option trades, if we get back down to like I'd say 180, between this 180 and 175 zone, I'm probably adding some additional spreads. So I have a March, a May, and a December and January expiration right now. Those are way out of the way. And you know, 150 to 1 whatever. I'm willing to own the shares. At least 100 shares of Google, I'm willing to own. Meta, I took that trade looking for the broken wing butterfly. I'm going to put just a note here. So 745 by 750 by 775. Broken wing, that's a 228 expiration. Okay, so as long as we stay below 745, make some money. If we pin this thing between 745, 750, that's ideal. But price would have to come back up and retest those all-time highs. Unlikely to happen, but if it can, I give myself a little bit of buffer there. Microsoft, still just treading water. I've got some dollar cost allocation, a lot of ratio spreads. Netflix, 1035. I've got a broken wing on this one. Let me look. I don't know if I can roll this thing, but I'm about to find out. Let's try a roll here. So if I go to Netflix, there's my broken wing butterfly. Right now, it's upside down about 120 bucks. Let me see. Fudge. So could I roll? Let me see if I can just roll. Let me take this one down to one contract. One contract. So I could roll this out by a week and get some additional credit on the trade. Could I roll this up? You get 30 cents credit, you get another $5 of wiggle room. That becomes a debit if I roll it out that way. Let me go out further in time. Oops. Okay, let's take. There we go. If I roll it out farther, let me roll it out to the monthly in March. Now they get wider. Son of a bee. The 60 by 80 versus 40 by 60. No, that's not going to do it. Crap. The strikes just get too wide at that monthly. That's surprising that the strikes aren't filled in. The strikes are 20 points wide. So it's fine. I mean, as it stands right now, I've got a little bit of buffer here. I need to see a little bit more of this. If we go lower, that looks better. I've got a pin price here for next week. It looks like so. It's a broken wing butterfly. So I have profit on the credit side. I can pin this thing for $11, and I've got some risk Max loss is about $900. So it's not the end of the world. If I lose, it's a 0.5% risk, but I'd like to see price, basically stay 1040 or less. Okay, less than or equal to 1040 would be ideal for that trade. And if we have some pullbacks, which is another one that has a pretty high bar count, if we have some pullbacks as we go into this week's monthly expiration, or even go into next week to finish out the month, my feelings wouldn't be hurt if this thing drops. Nvidia, you've already had a pretty good run. Earnings coming out next week. This is going to be a big one. Whether or not you have other major news lined up next week, Nvidia is going to be a major pull. This probably has more emphasis on the market as far as how it affects the S&P, how it affects the Nasdaq. This is stock number 2, with also a lot of volatility and a lot of leverage around it. So key earnings next week, after market on the 26th, which is Wednesday. I don't know if this is going to be awesome earnings, how the market's going to interpret it or digest it. It doesn't really matter. I just know that it's going to be something that's going to move the market. Okay, so that's probably like major headlines next week is what's Nvidia doing. Could we see the trajectory of their earnings momentum fading, right? Could we see, like, instead of this exponential growth, we start to see that they're going slower growth, right? Their pace of growth is slowing. And if the market doesn't like that, I mean, that's why Nvidia and many other stocks are kind of, quote, priced to perfection. So we'll see. Could we end up, poking the highs again and falling? Sure. Yeah, maybe. Could we have another dip or a pullback? Sure, maybe. I don't know. It's probably right in the middle where it's going to be like kind of a perfect earnings play. It goes up, it goes down. I don't really know if it makes any progress one way or the other, but it's going to get a lot of traders excited, and probably a lot of traders will play it poorly. Here's what I'll say. If we have a dip on Nvidia, I'm more likely to sell some premium and take the dip. But directionally, it's probably priced out where it's hard to get this unless Nvidia is going to make like this big move way beyond the expected earnings. So I don't know what's going to do next week, but that'll be something to watch. Tesla responding a little bit nicer. We're just around that 144 moving average. I think Tesla looks pretty good. I still think Tesla could slide into like the low 300s, maybe even the high 200s. But I'm going to stay long and kind of committed to just dollar cost averaging into Tesla. Also have some ratio spreads here. This one expires today, this week. This will expire on Friday for $2.20 credit, which will be a nice little winner. Got one out also into March and a couple into April and May. Similar setups. Berkshire Hathaway coming back up towards highs. That was a nice little trade that expires here. Ratio spread, another couple bucks. I've got this is like a lot of my trading this year. The reason I'm up and positive and outpacing the markets is just a lot of opportunity was taken in December and January to position myself for Q1 with a lot of premium selling, a lot of income collecting, and these are working out pretty nicely. So all these stocks, I mean, I've done it on Apple and Amazon and Google and Meta and Microsoft and Netflix. Took an earnings trend, Netflix as well, Nvidia too, Tesla. I mean, all these, it's like they all have trades. So if I'm averaging like $1 to $2 on all these trades over the course of January, February, March, it's like it just adds up. It adds up pretty smoothly. Hasn't really had a ton of threat to it. So I'll be watching. A couple of the things here, 10-year yield. As long as we're above 4.5%, I'm calling cautious bullish. So as long as we're greater than 4.5, I am cautiously bullish. I think this is the struggle bus for the market. 4.5 to 5%. That is not a good window to be looking at this and thinking like these markets can make all-time highs. If we are fortunate to see the market actually go higher, I think the yields could go lower and the dollar index could go lower as well. I think if the dollar stays bid and the yields stay bid, this market's going to struggle to go much higher. We talked about the inverted yield curve stuff. So the 10 to the 2 year, the 10 to the 3 month, unless this reinverts, right? We disinverted, and I think that's a scary thing because it's been one of the longest and deepest inverted yield curves we've ever had. But if we reinvert, coming back below the zero line, I don't know necessarily of what that means for the market. Maybe it's a good thing. Maybe temporarily it's a good thing. Okay. But this is usually coinciding with a rise in job losses too. Same thing here on the 10 and the 2 year. Okay. In fact, when you start to look at this trend shift, when was this happening? This trend shift here, when we got to this disinversion, that was when that SOM rule was activated last July. That's when everyone was worried about it, right? Here's your June, July 2024. Everyone's worried about the SOM rule. All of a sudden, the Fed comes out with 100 basis points of cutting, and we start to see that, it's just a different labor market. And I don't think the labor market's going to get super awesome. I think AI is going to be there where nobody's talking about. I said this yesterday in my live session. Nobody's really talking about it. It's not a popular opinion to cut jobs. Okay, DC is cutting jobs. JP Morgan is basically saying to hell with everybody. If they don't want to return to the office, we'll fire them. I mean, it was a couple of years ago, you couldn't get people to come to a job. And now it's like everyone's looking for a job and they're like, well, if you don't want to come to the office, we're not going to hire you. And on top of that, tech is laying people off. Like, 2 to 5% of the workforce is getting let go. That is tech going for margin. That is tech going for profit. That is AI. That is do more with less. That is the ability to do more with less. But it's not a popular thing to talk about. You're not going to see it make major headlines. But I think that in the background, tech will be as profitable as possible, or trying to be, because they can spend a ton of money, which your Mag 7s have lots of it. They've got lots of cash, so they can spend lots on this AI infrastructure, this AI arms race. But I don't think that anyone's really paying attention to the next few years, where the jobs could get bad enough where it's like Main Street feels it. Main Street feels recession. Wall Street is in its own little island, in its own bubble of like, look at how much profit we have. Look at these profit margins, and that's the difference between the real economy and the stock market. Big difference. Okay. All right. We good? Okay. Mortgage stuff, futures, currencies. Got some other stocks to list out here sector wise. I mean, overall today, it's like I said, on the SPY, right down 615. I think that level gets tagged by Friday. Maybe it's today, maybe it's tomorrow, but we'll find out. We've got FOMC minutes today. Sorry, I can't attend. I know Nick and the team will be on to discuss the minutes. It's going to be released at 2:00. I'm curious what the market does today, if there's any reaction to it. We've had several pokes of these all-time highs on the SPY and the SPX, and the Qs yesterday poked their all-time highs as well. So will we continue to nudge those all-time highs with any type of momentum? And I think that's one thing that's missing right now, is we're getting up to these highs, we're nudging these highs, but I don't think the momentum is there. So it doesn't make me bearish. It just means that if we're just keeping this like nudge and pause and pull back, and it's just really slow, or obviously if we have a decline, then I think there's more like broadening patterns that people need to be mindful of, where the highs are bull traps and the lows are buy opportunities, but people see that as bear traps as well. I could see a lot of that happening for the first maybe 3 to 6 months this year. If we blow the top off, I'm still looking for these volatility expansion moves, and that's fine. But blowing the top off makes me a little bit more, enjoy the run, protect your profits, and maybe even go to like protection mode by May or June or July this year. Because I think if we get overstretched percentage-wise from these 200 moving averages, I could see an interesting like first half of the year versus second half of the year being very different. I don't think that we're going to produce 20+% gains in the indexes this year. Everyone's been talking about how easy it is to be a passive investor. I mean, it has been, with the exception of your volatility drama in 2018 and your bear market in 2022. If you just basically went to sleep for 30 days in 2020 for COVID, then you never even saw the dip. But otherwise, you had a bear market in 2022 that was pretty legit, and that was everything. But point is, like, I've got plans, right? If the market gets crazy bubbly, then I'm going to be protecting as many profits as I can, and probably even turn to like preservation of capital second half of the year. But we'll find out. I mean, otherwise I just keep grinding my butt off, taking some income trades like I'm positioning for, staying out of the way, give myself a large margin for error, and just continue to trade. So, all right. I think I'll wrap it up there for today. So a new trade posted in Meta. That's out to next week. Got some other trades that expire next week. Let me take a quick peek at those. What do I have for overall days to expiration? So I have some. Let's see. That's a credit spread. Okay, so I got a 52 by 51 credit spread on IBIT this week. That'll look good for profit as long as we stay above 52 bucks. It's looking pretty solid. So I've got some winners lined up this week. Let's see. That would be Tesla's lined up for a winner this week. IBIT, SPX. See if we can grab some SPY. Look at some earnings plays. I do want to take one quick look at Intel. I talked about this yesterday. Intel is trading at 25.92. So we got a little bit of a pullback here. I was looking to roll my diagonal spread. So let me see if I can get something going. Even if it's in the money, I want to pull this a little bit more profit if I can. So I have a 3 by 22, and we're trading above that. So what I need to do is look to roll my $22 call. I've got 30 days in it right now. If I roll it out into April, even if I kept it at 22 bucks, I'm going to try to roll it for a little bit of profit. So I'll keep my shares. Those are running unhindered. I'm going to let that run towards, I think Intel can get up into the mid 30s. I'm going to let that run a little bit more. But for my $22 call, let me see if I can roll this out. So if I roll it another week, doesn't really help me. If I roll it to the April expiration, well, that's awful. I can roll it up $1, but it's going to ask me to pay 37 cents, so I'm not going to do that. I could just keep the strike the same at 22. That's essentially I'm trying to think here. There might be about a 20% chance that price comes back to that. If I roll it out to May 16th, I get 80 cents on that. That's another $80 a contract. That's not bad. I've got this in. I mean, that's another like $1,000. I think it's worth it. I think the odds of Intel coming back down to 22 are pretty slim. I can go out a couple of months for that. If I can roll it up $1 and get that trade, that one I might take. I can roll it up $1 and get credit on the trade. That gives me another $1.15 on, what is that, 11, 12 accounts? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So on 13 accounts. So I can go up $1.15, 13 accounts. That adds another $14.95 per contract. Yeah, so $14.95 per contract is pretty good. I could turn this Intel position into a pretty nice chunk. So let's go Intel here. Currently up about $5,800. If I can add another, I mean, I could get close to like a $10,000, $11,000 position. Yes, I'd have to wait a little bit longer, but I'm also okay with that. Do we come back to $22? Sure, maybe. But even if we do, I'm still liking the idea that this thing can have a big squeeze to the upside. Bigger picture on Intel. I mean, even any type of catch-up trade here, 29 to 30 bucks, I'd try to let this one go. So the nice thing is I'm running this diagonal spread alongside just owning shares that are not covered. So that's kind of the benefit is I can let the uncovered shares just continue to work. And then the diagonal spread, I'll just try to pull a little bit more profit if I can. All right. So I'm going to try to roll this really quickly. And let's go into right here, Intel. So I'm just going to roll the $22 sell call and roll this out in time and up a strike. Try to get an extra $1.15 net. And that's fine. That's about as good as I can do right now. So let me roll this. Let's go out to May and again up to $23. If I can get filled here for 15 cents, let's see if this will fill. Bid is 5. I'm looking for the mid at 17. I'll try to roll this for 15. That's 2 cents below. I'll try the mid at 17, but let's see. Something tells me this is not going to fill, but let's see what we can get. 17 cents is not filling. Let's try 15 cents. I'd love to get filled with 15 cents. Son of a gun. All right, let's penny it down. Hopefully we get, all right, I got filled at 14 cents. That's totally good. I'll take the trade. All right, so Intel. So I rolled it up $1, grabbed 14 cents. That's $1.14 added to my bottom line. So bought the shares. That's fine. Allocation, that's fine. There's my 3 by 22. Here it is. I got to update this one. So Intel rolling the 22 call out to May 16. So now it's a May 16 expiration, $23 sell call for 14 cents credit. So that brings my break even is going to be down to 19.12, and that's from a $3 long call. So 3 plus 19.26, get it called away at 23. There. So that's the income trade right there. So I'm going to roll it. And then the shares can run untouched. Here it is right here. So same thing on the 22. I'm going to roll this out to May and up $1 and get 14 cents. Filled to 14 cents. Okay, very good. All right, this will be, I'll do this and I'll wrap it up here. So $22 roll out to May. This one is very different for some reason. Oh, there we go. Rolled up $1 there, 14 cents. Okay, very nice. Okay. So out to May, up to 23, 14 cents. Perfect. Out to May, up to 23, 14 cents. Okay, and I'll just keep knocking this out. Roll. I actually did the math on that. I'll show you the math in just a second how this one's going to work. So roll out to May, up to 23, 14 cents. Keep going. A lot of rinse and repeat in trading. That one just has shares. This one has this one I have partial shares. Let me roll this out too. I'm going to roll this out to May, up for 14 cents. Okay. And also, I have the shares. I bought more shares on this account. This was a new client account that I have. So, trying to think. Now I have the diagonal spread. I'm going to roll the shares out. I don't want to get them called away, but it's kind of tough when I'm almost $4 in the money. It's going to be tough to not get these called away. But I'll still keep the partial shares. So do I get them called away this week? No, I'm just going to try to do a quick roll on this. So if I roll it out another 16 days, then I get 20 cents more. If I roll it out to March, let's see, that's not bad. Roll it out to April, roll it up. Okay, so out to April, maybe out to May. This is better. So I can roll this one out to May, go up by $1, still get 55 cents credit. That one turns into a debit, but I increased by $2. I'll do this one. Let's see, maybe go out further to June 24. I think I'll keep it here. $1.57, $1.90, $2.35, and this one's a debit. So I'm probably better off rolling this up to 24. Keep the shares, roll it up to 24. That gives me $2.35 more profit net position wise. All right. And that's good. I'm going to roll this one out to June. See if I get 35 cents in this. 35 not filling. Try to get rolled at 34. 33. Son of a biscuit. Hopefully 30 cents. Got filled at 30 on that roll. Okay, that's fine. So that takes care of, I've got the shares, rolled the covered call on just the shares, rolled the diagonal as well. So I'm good on that position. Next up, this one, I'm going to roll this to May up to 23. Hopefully get 14 cents fill on this one. Filled there, no problem. This one I've got shares on. Excellent. And this one, okay, 3 by 24. This one's fine. So this one I paid 1733 minus the 328, paid 1405. So I've got this one with a break even at 1705, getting it called away at 24. So that's 695 a contract. That's a pretty good income trade for that final account. All right, I'm good. Fresh highs for the year. Keep poking that like 176, 177. Hopefully I'm going to see a 180 plus on the year. That'll be another high. Just caught another move where we're getting back up to the highs again intraday. So I still don't have my chart alarm activated on SPX, but it's right there. Can we get to those highs? We're going to find out. All right. I will let you go. Intel roll I did. That was on the to-do list for this week. Awesome. Took a trade on Meta. Cross that off the list. All right. I'll let you go. Have a good rest of the day. FOMC this afternoon. Join Nick and the team at 2 p.m. See what that release looks like. Do we have any price action drama? Yes, no, maybe. Otherwise, I'm looking at 615 to get hit on the SPY this week. All right, thanks. See you soon. Bye.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. It's been a while. It's been almost a week since I've seen you guys. Let me sort my camera out to move it that way. Cool, good stuff. How is everyone doing? Hope you're all having a good, it's actually midweek now, isn't it? Hope you're all having a good midweek. So, positions I'm in, currently very long on silver. Actually, I've got 3 positions open at the moment. I can show you floating P&L in a second. Swiss yen, I was talking about Swiss yen. Actually, I spoke with Nick about this one on stream, I think it was 2 weeks ago now, maybe. And since then, we had this pullback that I was looking for. So took the short position. I'm now looking for sort of a scale-in position. I've got two situations that I'm interested in seeing play out here. So we've either got a complete break of this support level, retest continuation to the downside, that would allow an entry. So we'd be looking to scale in on the retest. Or worst case scenario, we see a rejection here and start to see some upside movement. And in that situation, I would be a little bit happier because that would allow me to build up a larger position over the long term or ready for the long term. So I've got no problems sitting, basically just waiting for Swiss yen. It's a position I plan to hold for the next anywhere between 6 and 18 months. I'm in no rush really to see this position play out really. Obviously the Swiss and the yen have equal interest rates, so there's not really any swaps there that I need to be concerned of. There's just some holding fees on spread betting. In terms of targets, potentially down to 137, maybe sub 120, but that's quite optimistic. We will have to see about that. So that's that. I am long dollar Swiss as well. So I had a position on Valentine's Day, actually on the 14th of February, scaled in today. This one's now sitting in a little bit of profit, so that's quite nice. And I decided to also go long on DAX. Now, this one's a little bit of a, I don't want to say gamble, but it basically is. It was more just to see what happens. I've got very small positions. You can see currently down around £35. So it's really no big deal. It's more just to see if we can get some mean reversion. Maybe I can pay for a coffee. But if not, I'm quite happy to cut it. No harm, no foul. These are the silver positions. It was up really, really nicely this morning, but it seems to have pulled back. But it's very normal to see silver sort of fluctuate 1 to 2%, maybe even 3% on a day-to-day basis. Swiss yen, here is the position, currently £150 in profit. So again, nothing big, but as I'm looking to hold it for a long period of time, I didn't want to go in super big. Initially, it's more a case of just getting my feet in the water and start building something. So just looking for additional entries there. And this is the dollar Swiss trade I was just showing you. So that's my portfolio at the moment. Nothing overly interesting. I mean, we're sat in the blue, but yeah, we'll just have to see how DAX plays out. It's had... What is the decline here on DAX? A 2% move today to the downside. No correction. It's looking, relatively oversold in terms of just short-term price action. So yeah, looking for potentially just a mean reversion. But again, very low position, or very small position. So if it doesn't work out, it's cool. Bashi, hello. Lee, hello. Let's see what's going on. I've been in the studio getting your makeup ready for the stream debut. Oh, Bashi. How do you start learning fundamentals if you got your data from Edgefinder? Find somewhere to learn fundamentals. So I made a video, started a video series for my Discord people. It's basically breaking down becoming an interest rates trader, which is essentially what I am. So it's like looking at all the different data points. If inflation's rising, rate hikes are more likely. How is the employment data coming in? So NFP, unemployment rate, jobless claims, that type of thing. So it's a case of looking at all the economic indicators. I'm sure if you just Google economic indicators, you'll get a list of things, and then obviously look into those one by one. And then once you understand each one individually, you can start looking at how they work together. So that's basically how you could go about it. But learning fundamentals isn't something you can just do. Keep in mind, people have whole careers on analysis. People spend years at university trying to learn this type of stuff. So don't get discouraged if you just don't get it, because trust me, it's really confusing. It's a very complex world. And I'm by no means an expert on economics. I know what I need to know, and that's about it. That's about as far as I am willing to go, because I've got no interest in really much more. Anthony, hello. LFTJ, I was really waiting for GU pullback. Yeah, I did catch a GU sell, but it really wasn't anything exciting. It was also a very small position. But yeah, my foot's off the gas now. If any of you watch my content regularly, you'll know that I've been very bearish on the euro dollar for the past 3 months. I'm starting to be a little bit hesitant now. So essentially, it's been free money for the past couple of months. It's been very easy. You just had to click sell on euro dollar and you'd make money. But with the peace talks with Russia and Ukraine, yeah, I'm just not sure I want to get caught in the middle of that one, to be honest. And the reciprocal tariffs as well, I need to have more clarity. So yeah, I'm kind of just chilling at the moment. Longing silver, what's a pleb? Well, it's in profit. So what's wrong with that, Sammy? Are you short and got liquidated? Are you a little bit upset about that? It's okay. I would be as well. You think FOMC minutes will cause a pullback in SPY? I don't know, Brandon, to be honest. I wouldn't expect anything too crazy. I would expect it to reinforce the rate hold idea. Obviously, we had inflation forecasted at 2.9 previously, came out at 3%, which obviously isn't, it doesn't reinforce any sort of rate cut narrative. So I'm pretty sat on the fence really in terms of rate cuts. Quite happy to say that we won't really see one until later this year. When I say later this year, I'd say the second half, to be honest. I think it was June was the projection, and then obviously we had higher inflation, so that sort of expectation has been pushed back even more. What do I think about UK 100? Oh, it's okay, Sammy, don't worry. I'll be honest, I'm exhausted. It's been a very long day. But yeah, I'm maybe a little bit hot-headed sometimes. Anyway, who asked for UK 100? Oh, CJ. Okay. UK inflation came out higher today. Was it today or was it yesterday? Let me just, anyway, either way, it doesn't matter. UK inflation came out slightly hotter, which wasn't great for the FTSE. Obviously, higher inflation slows down rate cuts. But the problem is the UK, or the Bank of England, kind of has to cut rates. Really not in a good position in the UK. So to be honest, I would continue to look at going long on the FTSE. In terms of where, I'm not sure. The weekly looks horrible, to be honest. So on the weekly, we've got pretty strong upside rejections here, pushed up the Bollinger Band. We've got RSI overbought, obviously wick rejections. So yeah, that really puts me off actually going long. Although the H4 looks fine. Let's just see here. So we've got a very simple level, RSI slightly oversold here. Trend is overall bullish. Yeah, to be honest. Oh, actually, I've just noticed as well. The FTSE is bullish here. It's got a reading of 7, so that's a nice little confluence. So maybe this would be the first buying area, in my opinion. If not, then maybe waiting for a correction of these, the bullish candles back from the 25th of February. Wait, hold on. It's, oh, sorry, the 5th of February, not 25th of February. So yeah, maybe something like this would suffice. Mohammed, hello. News always takes my stop loss. I mean, that's a bit of an open question, to be honest. Are you not checking news before you place a trade? What's your stop loss size? What's your strategy? Yeah, there's a lot of things I could say about that. Mohammed, I can definitely you can ask a question. I can't give any advice, unfortunately. Not regulated to do so, but I can do my best to help. Alan, hello. Good to be back. Yeah, Mohammed, you can ask something. It's no problem. Yeah, Alan, have a great time. Okay, let's see what's going on here. I don't really have anything, to be honest. I was saying on my stream this morning that I'm just I've got no interest in short-term trading at the moment. With the Fort Knox thing, with tariffs, with the Ukraine peace deal, there's just a little bit too much of a like a gray cloud or uncertainty. For me, I like to have sort of cut and dry, simple markets, which obviously is rare, but there just isn't that at the moment. I can't trade the Canadian dollar, I can't trade Mexican peso, I don't want to trade gold, I'm already in silver, not really interested in the US dollar right now. I more sit bullish to neutral, or slightly bullish, but not bullish enough to start looking to really do much. But yeah, that's basically where I'm at the moment. I've also been off last week as well, so I'm a little bit behind on what's actually going on. I've not done much research since I got back. I know some indicator and price action, but I don't know how to build a forex strategy. Just test, just stick everything onto a trading chart. every single indicator that you can do and just play around with it. You don't have to start with something that's winning. Obviously, if you were doing that, then you wouldn't need to be doing what you're doing. So don't overthink it. Just try stuff. There isn't really anything you can do wrong in trading in terms of strategy. Everything in theory can work. It's just about how you make it work. But that's about all I can tell you, to be honest, because there's so many different strategies out there, and there's so much information out there on different strategies. But I think the most easy way to do it is just go on YouTube, type in swing trading strategy, scalping strategy, whatever you want to do, and just watch videos. Even if the strategies are useless, you can take something away from it normally, whether it's an indicator or a candlestick pattern or whatever it may be. There's always something to be learned. Why are you telling them to back test with a completely mechanical strategy? Doesn't work. Only subjective trading works. Yeah, I know, Ash. Trust me, I'm fully aware of that. But if he doesn't have a technical strategy, me telling him to go and learn economics isn't going to do anything. Because he still has to have a technical strategy. You could be a professional analyst at JP Morgan, but with no way to get into the market, you're useless, really. So yeah, there's that. Actually, that's something I would tell you to not do, is learn ICT. Unless you want to start a mentorship and post hindsight trading view images on Twitter all day. Okay. Silver's been playing around. I'm a little bit unhappy about that, to be honest. My target on silver is actually pretty coming up pretty quickly. I'm looking for anywhere between sort of 34 and 35. The problem is with silver at the moment, it's climbing and it's just giving back. It's climbing, it's giving back. I mean, overall, we are still moving to the upside. It's fine. But here, really nice move to the upside, just straight away decline. Here, move to the upside and then sort of decline consolidation again. So it's a very frustrating trade to hold. But what can you do? Just sit through it. James laughs at me because I use an SL. I'm not DCA worthy. No, an SL is the most sensible way to trade, really, for average manipulation. Do you see Trump tweet? I saw something, but I didn't read it, to be honest. I'm not sure it's manipulation. I don't think Trump cares about currency markets that much. Subjective trading is so difficult. You can't make people see what you see. Well, that's exactly it. That's the problem with technicals. You can have, 5 people in a room, and it's very likely a lot of them or all of them will see completely different things. Which is why macroeconomics is such a big thing, or such an important thing to learn, because you can't really argue that. If the Fed's in had a dovish tone and they're in a cutting cycle, you can't really say, oh, that's not true. I don't see that. Because it's data. So institutions stacking shorts on metal, maybe. I don't know. Actually, I've not checked. Let's see. Actually, what is smart money doing? I see silver. Slight decrease of longs and shorts. Overall, still long, but not really much change. Slight decrease. Gold, again, slight decrease, addition of longs. Overall, still long, but I wouldn't say the stacking shorts. I think that's a little bit aggressive. Although, yeah, it seems like the buying has slowed down a little bit. James, you're awesome. Thanks for sharing your knowledge. What's the opinion on waiting on candlestick confirmations versus straight up entering at predetermined levels? Well, I appreciate it. I don't really mind either way, to be honest. It depends on the strategy itself. If you trade like I do, in terms of the technicals aren't really much of a factor. It's more a case of if you view the market as bullish and prices at support, then you can buy. If it goes down further, you can buy again. So I don't really use candlesticks. I'll more use the momentum of the market and the most recent or the current trend. That's about it. But if you are using a technical strategy, so for example, if you are, let's just say, selling a resistance, it's probably good to wait for a bearish candle close just to confirm or at least give you some sort of idea that that level has been respected. Do I see potential moves coming on any of the pairs? Yen crosses, I would expect to continue bearish over the long term. Not really, to be quite honest with you. I don't really see anything in the markets at the moment. I was looking to go into US 30, but it seems to still be in a range. I mean, I've been talking about this range for a long time. So yeah, there's nothing to do there. Nasdaq, not really very interested in the indices overall at the moment anyway, especially with the Fed holding rates. I would expect pound dollar, euro dollar to continue down. I'm definitely not bullish on them. I'm more just waiting on the sidelines. So yeah, I'd be happy to still go short on short-term trades, but I'm definitely not going to be stacking them up as I used to be. Oh yeah, by the way, you can use code ELITE for a discount on the Edge Finder if you desire. Would you concede by having a subjective strategy, it's therefore impossible to backtest with accurate results? Therefore, surely trading is gambling. I agree. I think trading is gambling. I'm not one of the traders that sits there and says it's not gambling, but just like a professional gambler, you have professional traders, and we have strategies, we have an edge, we have ways to put the house odds in our, to put the odds in our favor or to beat the house. Obviously, the house being the markets. I think it would be a little bit delusional to say trading isn't gambling. Because yeah, at the end of the day, it's got all the same qualities. You're putting money on the line. You've got no certain outcome. The most we can do is manage the downside and do our due diligence. Other than that, you can't control the outcome. It's not like you can sit on the charts and do nothing for a month and get paid. So what do you think about pound Swiss longs? To be honest, I think, I don't know. I don't like the pound long. I think the UK still has many problems that needs to be resolved. The Bank of England is, or does seem to be on the rate cutting cycle. The Swiss also cutting rates potentially down to neutral or on zero rates. So to be honest, it's not a market I would be looking to buy. I think overall, you know, if you're looking to just buy and buy and buy, maybe not an awful idea, but it's not something I would be interested in trading. Mohammed, yes, I'm live every day on my own channel, and I'm live on this channel 2, maybe 3 times a week. Depends how the A1 guys feel about me at that time. Sold gold through short-term planning. Beautiful stuff. Alan, you're flat as well. Good stuff. Good to hear. Yes, I'm in positions. So here I'm in silver longs. I'm in Swiss yen shorts. I'm in dollar Swiss longs, and I'm in a very small DAX long, just to see if we can get some sort of correction off the 2% drop today. But I'll be honest, this is it's very, very small position, and it's more of a little just gamble, to be quite honest with you. So don't be putting any sort of credibility on those two on the DAX. It's very possible it could continue lower. No problem, Mohammed. You look bored today. Hope you're okay. No, I'm not bored. I'm happy to be here. I'm just really tired though. I've got a call with my accountant tonight. I did also my own stream, just been doing some work as well in the meantime. So it's just been crazy. Took a week off work and come back even more tired. Dollar yen seems to be drawing up to an imbalance. Let's have a look. Fairly sure dollar yen's bearish as well on here on the edge finder. It is. So we are getting a reading of -9, which is compelling enough for me to maybe look at. I'm not really sure what to do on dollar yen, I'll be honest. So I was really expecting this 160 level to get hit. Obviously, I was sort of looking at this level back when we saw this, the dollar yen starting to rise, and I was starting to consider yen longs. The problem is I'm not bearish enough on the dollar. Yeah, I'm just not sure because I'm bullish on the yen, but I'm bullish on the yen over a long period of time. It's not like I'm looking for any short-term strength. It's a case of, yeah, I'm looking for the next sort of 12 months, maybe 18 months. Whereas the US dollar, I don't really have a projection for that long. And in the short term, I am pretty bullish on the US dollar, or at least neutral to bullish. So I don't really feel comfortable going short, unless maybe if we can see sort of the continuation here of these lower lows, lower highs getting formed, we see this market continue to melt, maybe then I will go in for something, but yeah, not too interested. You should also pay attention to the swaps. You're going to be paying a lot of money if you do decide to short dollar yen, especially if you're a swing trader. If you're a day trader or scalper, it doesn't matter. But if you're holding a dollar yen short for a long period of time, get ready to be your broker's favorite client. James, I know market is climbing like crazy, but I was wondering what can cause the market to pull back. What market? I need a bit more. I need a bit more information on which market you're talking about. Am I watching for longs on DAX? I'm already in longs on DAX, but again, it's very, very low risk. It's the smallest position size I could have placed. So I'm just in 2 here. Nothing, again, nothing big, no real analysis done, just looking for a very simple mean reversion. So do not copy it because there's a pretty high chance it won't work. And what price should you buy gold? Well, if you go to the shop and you see a bar of gold for $1, I'd say that's a pretty good deal. So I'd start buying gold at that level or that price. I don't know. Let's see. I'm not really paying much attention to gold. I would like to see. Oh, sorry. I would like to get into gold and see 3,000 get hit. I think that's a very high chance that happens. In terms of getting in, I've got 2 options here. I could either wait for a 50% pullback into this fib level, maybe just getting some sort of, again, a natural 50% move, nothing crazy. Maybe I would go in for a long position there if I saw a candle confirmation. If that doesn't happen, then I would be looking to just buy off this level of support. Very simple stuff. But again, Fort Knox could be a great time to buy gold. Not financial advice. Gold rising, falling down. It's not really falling down. I mean, it's still continuing. It's pretty hefty run. So don't discount gold just because it's had a bit of a negative period. How do you spot a good entry point? So the way I spot good entry points is a market at the value I see it should be worth, and it should be, that's sort of what trading is. What is your value of that currency or that asset? So in this situation, let's hypothetically, this is, I need to emphasize, hypothetical. I'm not bearish on gold, but let's just say I started to see the US dollar have amazing data. It was really, really strong. US dollar rocketing to the upside. We're on a risk on market. The gold doesn't have much appeal anymore. I would view gold now as a bit too expensive. So then I would just say, okay, well, we've got a double top here. If I'm bearish, I'll take a stab. We'll have a go going short here. If it breaks, if it doesn't work, fine, no problem. I'll look for the next level. But you need to keep trading simple. I would say just using levels is almost the same way Nick trades. Just look for supports, resistances, build an economic bias, and trade into that direction and buy off support, sell off resistance. Industries, metals. Well, it's different things. So gold is rising through a lot of uncertainty in the markets. And I was kind of joking about the Fort Knox thing, but maybe gold is having a little bit of a panic moment regarding Fort Knox. So there is that. There's also uncertainty around the Middle East, Trump and Gaza, the Russia-Ukraine situation. So regarding gold, if you start seeing a lot of the factors that have been driving gold, if you see those start to get resolved, so let's say Trump says, I'm not going to bother with Gaza, let's forget that idea, that would be bearish for gold. If we saw Russia-Ukraine peace deal, bearish for gold. Fort Knox has, it's audited and it's fine, bearish for gold. If all these factors come out, then yeah, we can start seeing gold come down. I mean, that was a pretty simple explanation, but hopefully that made sense. I don't trade the VIX. I look at it, but I don't trade the VIX. Yeah, just got no interest in that. Do you have a trade on the dollar? Yes, I do have a trade on the dollar. I am long silver and long dollar Swiss. I'm pretty new. How do you spot support and resistance? Very simple. So this is a good example here. We just look, where has the market touched multiple times? It will very rarely be a situation where you can draw a very thin line and that's exactly where price is bouncing from. That's not really how the markets work. They're never perfect. So you have to go a little bit on intuition. So like here, we had a little bit of a support form there. Price touched again here, we touched again here, so that's a support. So it's a place in the market where price is respecting, keeps bouncing from. If it's done it 2 times or more, I would consider it support or resistance. New Zealand US dollar, I would say, is a pretty good sell opportunity actually. Although the New Zealand Central Bank had a hawkish cut this morning or last night, wherever you are, I would still say it's still a bearish market, still looking to go short potentially. But again, am I willing to go short? Maybe short term, maybe just for a day trade, but I'm not looking to hold anything really at the moment, dollar related anyway, or dollar crosses. So maybe something like this could work out. There isn't any dollar crosses on the edge finder at the moment. You've got dollar yen and that's it. So that's a bit interesting. But yeah, with the Fed holding rates, might be okay. But again, it's not my favorite thing ever. I'm very, very on the sidelines right now. I've got some long-term positions on, but that's it. You think US dollar CAD long is back potentially? Actually, it's interesting. We were looking at that this morning, and there is who was it? London Stock Exchange and might have been Credit Agricole. I can't remember who it was. It was another institution. There's 2 institutions currently in long positions on dollar CAD actually. So maybe it's worth following. I was considering going long. I didn't do it, but maybe something along these lines would make sense. But again, it's just the tariff situation kind of puts me off. I'm a little bit cautious, but I think maybe I'm being a bit too cautious, but I'd rather be too cautious and not lose money through being sort of reckless, if that makes sense. FOMC could affect gold. It really depends what's said. It's hard to say, obviously, without knowing. I doubt it. I don't think we'll see anything from FOMC, to be honest. I think it'll be a bit of a snooze fest. I could be very wrong. We might see something crazy, but I doubt it. If a support or resistance would break, you consider getting into that trade, continuing the trend. It depends. If I'm bearish on a market, and so if I'm looking to sell and we reach a support level, I'll wait for either a break and retest or a pullback off the support to then go short. I never make a trading direction decision based on technical analysis. That's why a lot of traders lose, actually, because it's not a reliable source for a direction. Silver's not doing much. Swiss yen's doing quite well. Dollar Swiss is doing nicely. DAX is not really doing anything either. So yeah, I'm sat pretty nicely at the moment. What do you think about US dollar Swiss? Well, I'm long US dollar Swiss, so that should tell you something. I will normally always be relatively bullish on the US dollar. Not necessarily even just because the data is coming out well. It's more a case of it's the world reserve currency. It's a powerhouse. It's, you know, you don't really want to bet against the US dollar. Long term, anyway. Short term, obviously fine, whatever. But long term trades, I would never really look to go short on the dollar unless there's something really, really overwhelming. So in this case on dollar Swiss, the reason I'm looking to hold it for the next couple of months is because we've got the Federal Reserve holding rates. They might cut later this year, but at the moment they're holding rates, which gives us a pretty good central bank divergence. Again, referring back to the Swiss National Bank, we've got them cutting rates and possibly going to zero or neutral rates, maybe even negative rates as well. So that will give us a really, really nice divergence in central bank policy. Can I show you an example? Okay. I guess we could do euro dollar. That's a good example. Let's go and find where that would have applied. I suppose this sort of move here would be okay. So we've got a support through here. During this period, I mean, as I said, I've been bearish on euro dollar for the past 4 months. So during this period, while we're bouncing off support, I'm still bearish. The trend is still bearish. I'm not going to buy the support. There's no reason to buy the support other than the fact you just drew a box here. So it doesn't give any substance really. It just gives you a guideline and maybe don't sell right there. So what I would be doing is waiting for these pullbacks. So I might go short here. And then might just wait. And once we have the break, maybe I'll go short again there. And that would be essentially it. Just using those levels as sort of guidelines rather than anything else. It's not something to specifically take a trade from. I bought gold for 5K today and I'm on minus 500. What do you mean you bought gold for 5K? Yeah, I'm a bit confused. What do you mean you bought gold for 5K? Am I being stupid? And also the 500 drawdown, again, it's very relative. What's your account size? If you've got $1 million in your account, then 500's, very, very small. But if you've got a $600 account, then you're in some trouble. So I need a bit more context. But yeah, I think, as I said earlier, I think FOMC will not have much of an effect, I wouldn't imagine. I mean, the data's been pretty clear. I really don't think the Fed is going to start cutting rates anytime soon. As I said already, I think later this year, maybe. But yeah, in the very near future, I doubt it. So unless they come out saying they're going to cut rates or even hike rates, then I think we're pretty fine. Although it is meeting minutes, it's not speech. So again, not very exciting. He spent 5,000 on gold on some investing app. Okay, that would make a bit more sense. So he spent $5,000 investing in gold, and you're now down 500. Okay. But again, I need a little bit more context. Is it a case of you want to hold gold for the next 10 years, or if it's an investing app, or is it a case of you looked for a day trade, now you're down 500? If I have 1,000 as capital, how much should I risk on a trade? $10. That's 1%. I don't trade Bitcoin. I invest in Bitcoin, but it's not something I've got no idea what's going on with Bitcoin. I should maybe check it, actually. It's done absolutely nothing since I invested. So I invested back here. It's the 31st of December, actually. That's when I started investing myself onto my ledger. And absolutely nothing has happened. I don't know why. Again, I don't trade crypto. I've got no idea what goes on with that one. JPY is really dominant. Other currencies, yeah, the yen is doing very, very well at the moment. So if we look, it's gained pretty impressive strength, actually. So that's nice. US dollar is doing okay. Euro and the pound heading down. That's what I like to see. I think pound dollar shorts might be quite nice. I was in shorts this morning, but I closed out for a very small profit. Maybe I might look for a re-entry at some point. Yeah. Meeting minutes is mine unless we see something that's new. Yeah, exactly, Bashi. I just realized my hat's really low. Sorry, I don't know if you guys could actually even see me. Sat here like an anonymous guy. If you invested 5K, how would you be down 500? It's hardly off all-time highs. Yeah, Nick, I'm a little bit confused about that message as well. I'm not sure what's going on there. Unless he did use... Oh, I don't know. How would that work? How would he be down 5K? 5K, down 500. Yeah, that's true. If he invested it, he wouldn't be down 500, would he? It's not moved that much. Anyway, whatever. If it matters, I'm sure he'll get back to us. Hi, James. I'm short Euro AUD going well, but I'm a bit worried with New Zealand yen. As in, when New Zealand yen goes down, Euro AUD goes up. What are your thoughts? And the correlation between these two. I don't really trade correlation, to be honest. It's not really much of a factor unless I'm going heavy. So are you in New Zealand yen shorts as well as Euro AUD shorts, or are you just concerned about the New Zealand yen price action? I think Euro AUD is a great idea. I think it's a really good trade, actually, to go to the downside. The euro still isn't doing well. The German economics are a little bit poor, or continue to be poor. Again, just that sort of Russia-Ukraine peace deal could drive this market higher if it goes through. But with the current market drivers, I think it's fine. I mean, the RBA had a hawkish cut yesterday as well. So yeah, I think we're maybe on a break, actually. This would be a pretty nice trade down. I might pay attention to this one. So we could go short here. Stop loss is a bit too wide for my liking. Maybe something like this, possibly. I quite like that. Wait for the break, a retest continuation. I think it's quite a nice bearish market. It's actually, I've just noticed as well on the edge finder. So you've got here -8, getting a bearish reading. So another little confluence there. Do I day trade? I do day trade. I just trade whatever I see, to be honest, Luca. If euro dollars give me a great short setup, I'll take the trade. Could be a day trade. But then if I see some long-term potential like Swiss yen, I'm quite happy to also sit in that one for a year, maybe even 2 years if it is required. FOMC is at 7 o'clock my time, so perhaps 2 hours away. Alan, I think it is probably a leverage position. I don't see any other way that he would be down like that. New Zealand yen down. I also agree. I think New Zealand yen to the downside is a sensible idea to have. But again, over the long term, short term, I'm not too sure. Again, hawkish cut by New Zealand this morning. How is gold doing? Taking a little hit, nothing too major. It's pretty, Yeah, it's pretty flat, really. Nothing of interest on gold. You do US oil. I'm going to assume you're asking and not demanding me to do US oil. But I don't really have any idea till go long. And I think Bash is in the chat, actually. Bashy, you'll remember from this morning's stream that I was talking about going short here. So the idea really is to just trade back into this range. I don't know. This would more be a case of just following the trend, to be honest. I don't really have any reason to go short or to go long. I'm pretty neutral on oil. But yeah, I think the easiest way here is just to follow the short-term trend, trade it back into a key level, and let it go. I have seen people talking about $60 to $62 a barrel, but I don't know what time frame. I don't know if there'd be a catalyst for that. I don't, as I said, I was away last week, so I'm a little bit behind. But yeah, I think oil down is probably the most simple way. What you say on dollar yen? Long-term bearish, short-term neutral. The dollar is holding its ground. The yen's also doing quite well. It's not something I would want to trade just yet. Maybe that will change in the future, but yeah, right now there's not much there for me. I think the only way I would really be interested in going short is if we could reach 160. If we saw 160 get hit, that would be my signal to get a bit heavy on the yen longs. But CFD gold for 5,000, and now I am on minus 500. I think I should sell before FOMC. Okay, that makes sense. But what I don't understand is, what do you mean you bought it for 5,000? But to be honest, if the losses really hurt it, if that loss is a big deal for you, close it. Don't try and risk it. To be honest, I think a lot of retail traders do it. I did it back in the day. It's where you hold on to a losing trade, hoping it will come back, and that's really the worst thing you can do. Me too. What's your strategy for day trading? I use SMC. I'm a dollar cost averager, Luca, so I will add in. I will build an economic bias. So again, just referring back to euro dollar, because that's the most recent one. I had a very bearish idea on there. So essentially it was just sell any pullback, any upside movement, sell, and then collect my flowers at the end once that trend continues. Euro AUD. We've just done Euro AUD. I think it's a pretty good trade. I just wait for the break of the current support that the price is coming into. Gold is volatile. If you're down 10% off the short move, then cut the position. In my opinion, it could wipe you out. Yeah, that's the thing. Gold is not nice for low capital accounts. A lot of people don't really account for the difference in sort of the pips. It can be brutal. If a broker's quoting 5,000 for gold, I think there's, I think some regulatory bodies need to step in. You're a buyer on dollar yen? Okay, let's have a look. Oh, we're on dollar yen. I'm not convinced. Yeah, I'm very conflicted. Yen strength, dollar strength. I think long is maybe an okay idea for the short term, but yeah, again, I'm a little bit too uncertain to give you much of an idea here. But if you were if you were a buyer in this market, I think something like this probably makes the most sense, or waiting for this support level to get hit and going long there. Your broker cannot be quoting you 5,000 for gold. There's no way. Are you sure it's gold? Wait, actually, are you sure it's XAU USD? That doesn't make sense. There's no way. Rupp, this is the wrong stream for you, buddy. I'm not here to give you any signals. And if you're in a stream to get signals, you should probably delete your account with your broker. I know that sounds horrible, but going to streams asking for trade ideas and entries, it will lead to you losing money, and I don't want you to lose money. XTB, I've never heard of XTB. I'm going to be honest, Farhan, you need to double check you're actually trading XAU USD. And if you're 100% sure that they quoted 5K, you really need to talk to the support. Yeah, but silver's nowhere near 5K. Silver's less than gold. Silver shouldn't be 5K. Look at us, we're like detectives. We're like CoffeeZilla. Idea on gold. I'm still a buyer. Well, sorry, I'm not a buyer, but I would like to be a buyer in gold. It's more a case of just waiting for the next opportunity. I've missed the whole run. Everything on this I've missed, unfortunately. But I am in silver, so I'm not really desperate to get into gold. I don't want that much exposure to the metals. But maybe if we could see some sort of confirmation, something, anything would be great. But yeah, that, as I said, I'm not really too interested in going into gold right now. I would be looking for some sort of pullback to go long, taking it into 3,000, but that's about it. Bought gold when the resistance breakout 2944. I went down 2924. Any chance it goes down more? Crypto Surfer is a very difficult. If I could tell you the answer to that, I'd be a multi-trillionaire. Yeah, couldn't give you a Scooby, to be honest. No idea. Can't predict markets that well. But again, the same thing goes to you, crypto. If you're in a drawdown and it's hurting your account more than obviously a normal drawdown should have 1 to 2%, then yeah, you should probably get out of the position. Don't hold on to hope. It will blow your account. No, I don't place a stop when dollar cost averaging because I don't care what the market does that much. I don't care if the pullback lasts longer than I thought it would. I care that the macro trend is still intact. I care that the overall long-term trend is still intact. So that's why I dollar cost average, because I don't really care about short-term price movements. I care about making money. So if I'm, for example, let's just say I go long here, I have a stop loss there. I've just been taken out by the wick. But if I don't use a stop loss because I'm very bullish on gold, there's no reason gold trend should reverse. I'm bullish. I'm cool. I'm still in the trade. I can scale in here. We're good to go. Or I could even scale in on the wick. Obviously, this is just an example. It's not actually quite as simple as it is, but I don't really care about short-term fluctuations or volatility. Okay. Luca, I don't hold any stocks, no. What are we trading after FOMC? I don't know about you, Good Hope, but I am going to be not really doing anything, just waiting for my current positions to play out. I mean, it will give a signal, well, maybe give a signal, but we'll see. When you turn a trade into an investment, you're cooked. That's absolutely right, Alan. It's a really good way of putting it. At least if you're a JPY bear, it'll stop you out in no time. It won't prolong your suffering. Yeah, very true. Let's see what else is going on. What about AUD USD? I think it's a good trade technically, also fundamentally. Not for me anymore. I was pretty bearish for a while on Australian dollar, US dollar. But yeah, I'm not too much of a fan of it these days. I think there's some potential there. Maybe you could get something, but I don't really want to be too involved. Maybe if we could get a bearish engulfing daily candle, that might pique my interest a little bit for a short-term trade. But yeah, not too bothered, to be quite honest with you, either way. I know it's been a bit of an uneventful stream on my behalf. I've not really had that much to tell you, unfortunately, so I do apologize, but it's nice to be here. Nice to hang out with you guys as always. I predict AUD USD will consolidate for next month. Maybe. I think a 2-month consolidation on AUD USD, I'd be doubtful, to be honest. I wouldn't be putting money on that. But I do have about 3 minutes left until you've got the next guest. It's a new guest, actually. It's one of my friends, Bashi. So if there is any questions left for me, feel free to ask now or forever hold your peace until tomorrow. If not, I can find something to yap about for the next couple of minutes. Blue, are you actually talking to Nick, or are you asking me and type Nick? Either way, let's just see. Little check up on positions. Oh wait, hold on, that's the wrong one. We need silver. Silver seems to be recovering a little bit after its little down phase. Swiss yen's fine. Dollar Swiss is fine. DAX might have to cut this one, to be honest. We'll see, or I'll see later tonight. Maybe I'll get out of DAX and sort of bin that idea. Yeah, neither do I, Nick. Happens quite often, though. But yeah, Blue, I'm sure me or Nick or one of us, I'm sure will make a video about it. I think, actually, I've already done one on my channel. So there you go. So yeah, I've got 2 minutes left. It's a little bit quiet here, actually. Yeah, nothing too interesting. I think I want to get back in. Oh, sorry, not get back. I want to get into silver again. I just need to wait for this sort of consolidation to end. So I need to see sort of a continuation up, then a pullback, then another continuation. I don't want to scale into this because it's too close to my initial entries and it's a little bit messy in terms of price action. Hey, Nick.
What's up, James? Yeah, I always find that funny. People will come on. I actually haven't even been on the stream in like 2 hours. Like I've made lunch. I've been working on other things, and there's a guy saying, "Nick, can you do this?" And I'm like, "What? Who are you talking to? I'm not even here." Anyways, James, thank you for coming on as always and sharing some wisdom. This is your first stream back, right? Since your hiatus. How did the Madrid thing go? I watched some of that video. It was pretty cool.
Yeah, thanks. It was good. I'll be honest. It was probably one of the most scary things I've ever done. Yeah, it was really good.
Why scary?
I've never done public speaking before.
Okay,
gotcha. It was weird. I was thinking, on your streams we can have 200, 300, 400 people and upwards, but then having 35 people in a room with eyes on you is such a different feeling.
It is weird. Like I've obviously, like you and I, we've spent a lot of time on camera in front of a lot of people over the internet, but it's different in person. It is a different experience. So yeah, well, yeah. Anyways, you did great from what I saw in the content. So
thank you.
Congrats on doing that, and very cool. But James, thank you again for coming on to the show, sharing some wisdom with us, sharing some ideas. And I like the yen bullish calls as well. So we'll see if those work out for us. And I know you're on the silver trade. So if you could go ahead and pump that up for me, I'd really appreciate it.
I'll try my best.
All right, James, thanks for coming on. And guys, make sure go subscribe to FOREX James on YouTube if you have not already. He mentioned this earlier, but he also does his own live streams separate from the A1 Trading Show. So make sure if you want more content from him, you can find him there every single day. James, thanks very much for coming on, man.
Cool. Thank you. See you later, guys. Have a good one.
All right, guys, up next, we are bringing in, for the very first time, a stream regular. We're going to set up this in just a second. We're going to go ahead and play a quick break, set up the cameras, make sure everything is good to go. And then we're going to bring in Bashi, one of our regular live stream guests or viewers, now coming on as a guest. Stay tuned. We'll be right back with him after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. And yes, like you saw, if you're interested, check out 8cap. The link was just dropped in the chat. You can get some of our stuff for free with them. They actually purchased the Edge Finder on your behalf, which is pretty cool. So all the information can be found in the chat. And now we are joined by Bashi. Many of you guys, again, may recognize the name on the screen, but now he's here on camera. Hey, Bashi, how's it going, man?
Hey, hi, Nick. Hi, everyone. Yeah, just hi. What's going on, guys?
It's good to have you here. And again, you've been here, just not on the camera side, right? So you've been in the chat, hanging out with us and chatting along. But now this makes the second one. We had Alan join us here. He's been great. People really like his commentary. And now you're up to bat to come share some ideas. Bashi, before we jump into some charts, what do you focus on most? I think you're a Forex guy. Is that right?
Yeah, mainly Forex. So I mainly focus on currency pairs. The way I trade, I can do like metals, gold, silver, US 30, Nasdaq, but I trade the M1, so I can't manage too many pairs.
Yeah, no, I don't blame you. That's a lot to try and keep track of. Like being on the 1 minute time frame is it's a lot faster. So now in terms of 1 minute time frame trading, are you somebody who's in and out many times in the same day, or are you someone who is like you execute on the 1 minute, but it can take time for a trade to play out?
So I normally execute on the M1, but I normally just kind of do session trading. So I normally focus on London Open and the volatility for the volume that you get in London Open. So normally like EU, GU, GC, GJ. I normally trade like between 8 to about 9:30, which is where most of the volume tends to come in quite aggressively. So I normally trade that. In terms of amount of trades I do, I'll probably just take one trade in London and I'll probably scale into it depending on how it works out with the partials and stuff like that. If I've managed to take partials in the trade and it gives me an opportunity to enter back in again, then I might, risk some of the profit I've already made into that trade. So it's a risk-free option of maximizing profits, basically.
Yeah.
But mainly just the one trade, probably two in London. Rarely trade New York, especially with Trump nowadays.
Yeah, no, it's definitely a volatile time. And Bashi, you have some really good looking charts. Could you share your screen and if you have that on your screen, you should
give me 1 second.
at the bottom, the little plus icon on your StreamYard. I believe you did it when you did the call with James.
Yeah. Just opening up TradingView now, so give me 1 second.
No problem.
I haven't looked at the chart London session today, so I don't know what's happened.
Yeah, no, I was going to say when Bashi did the prep call with our producer behind the scenes, I noticed his charts looked really good. So you guys hopefully will like them as much as I do. He's got more of a beige kind of white color background, a silvery color, which I think is pretty cool. Chart colors go a long way. I'm just curious, everybody in the audience, what colors do you guys usually go for? You go for dark themed? Are you a light themed? What you got? What's the craziest? Does anybody do like pinks and purples? I've seen people do those. Those are kind of some crazy some colors. But Bashi, if you're ready, we can show your screen here.
Yeah, there we go.
Very nice.
I like having a really plain, simple chart because when you're trading M1, it gets a bit messy. So this is probably the highest time frame I'll go to, 15 minute. That for me is high time frame, kind of. But I like keeping it really simple, nice and neat, nice and clean. You don't need too much mess on there. The more stuff you see, the more it complicates things. So you want it easy on the eyes, because I don't really trade with any indicators. It's just pure price action.
Sure. Well, walk us through a little bit. You've got your charts pulled up. Obviously, you got a lot of pound pairs here: pound Swiss, pound dollar, pound yen. You're trading the London session you mentioned. Give us a little bit of a walkthrough of what you're looking for, whether it be on the 15-minute chart or the lower time frame. What's kind of your go-to setup, or what you're looking for during that London session 8:30 move?
Yeah, so basically, I normally look left. So Asia to me is really important. So context matters a lot, and Asia, I think people overlook that. Whereas in me, I quite delve into Asia a lot. I look at what is it doing on the M1, where are the liquidity sweeps happening? Because I kind of trade liquidity sweeps, I suppose. So like Asia high, Asia low being swept, previous daily high, previous low being swept, and then on the M1 look for an entry. So on here, for example, let me just pull up GU. So here we can see we've got Monday's high, right? So then what happened in Asia? Asia swept the high. That to me is really important, because I try to trade away from where the sweeps are occurring. So then if I was to drop down on the 5-minute time frame, for example, then I'd start to look at what's happening in Asia. We had a buildup of orders here. They were taken out. We had a push to the low side. So that's showing me that after Asia's taken this high here, the Monday high, we start to show bearish intent. So how do we see that? We see it breaking structure to the low side here. So to me, that's important. And then what do you see? We see a buildup of orders here, kind of a channel, a bearish channel. Now that's important to look at. So now we see from there, we see kind of a ranging channel, but slightly to the bullish side. So all I see is orders being collected at the bottom here. So then I see another build up here. Now Frankfurt open is an important time for me, because I trade time windows. When you trade the M1, time is a really important factor. It's one of the most important things in my trading, is the time of what of which things occur. So if a setup happened at 12 p.m, I wouldn't take it. It has to be within the time window, because that time kind of protects me from being stop hunted or something like that. So here we can see a build-up channel. We see it coming higher, taking out this high here, which took these highs out. We had bearish momentum there. Now we can see we got a bit of a trend line forming here. So you're going to get trend line traders entering in on this. So I don't look at taking a trade with a trend line. I look at kind of attacking it. So my method is kind of attacking stop losses, I suppose. And then what do you see in Frankfurt? We had, today was news. We had, was it CPI today? I think it was, wasn't it? Yeah, CPI today for GBP.
GBP.
Which was perfect, because the wicked high took all the sellers out, wicked low took out some buyers, I suppose. And then in London open, important time. What are we seeing? We're seeing push to the downside. That to me is showing that the intention is still for bears, because we're seeing that here, build up, taken, push down. This high was taken by here, push down. You had the news come here, taking this high out here, pushing down. So the momentum's clearly showing that we want to look for sells. And that's on the M5. You can go into M1 and analyze that further.
Yeah, no, I love it. It's very granular, and I like that a lot. Like you're breaking down even to the CPI event that we had, the post news reaction. Also, a very interesting thing to think about too. A lot of times when you get those big news events like a CPI, which by the way for the UK came in much hotter than expected, inflation,
Yeah, it did.
ticking up from 2.8, I believe, up to 3, or I think at least the forecast was for 2.8. But regardless, a hot inflation print for the UK, and regardless of that, the reversal and then the sell-off. So I guess that brings me to another question: do fundamentals play any role in what you do day to day? Now, you may be aware of what's going on with them, or you may keep them in mind, but do they play any part in what you actually do in terms of execution?
So in terms of execution, not necessarily, no, because you're on the M1, so you're kind of following more technicals, but I like to include fundamentals. For example, I like to be pro-trend. So here's where the edge finder is ideal. You just pull it up, look at top setups, boom, there you go. Or the heat map. Because I trade GBP, the heat map is fantastic because it's going to be something I'm quite reliant on.
Sure.
So those trades I could probably be a bit more cheeky and I normally have a mechanical approach of trading, so it's very fixed. My stop loss, my TP, my partials, very, very mechanical. So if I ever come across a pro trend day where it lines up with the fundamentals, I could be a bit more cheeky in terms of leaving a runner to capitalize on that fundamental bias of the day. But as you know, with some fundamentals, they don't always occur exactly on the day the news comes out.
Sure.
It can be over the long run. So it's about understanding when and how to implement it and what time should you allow the runners to occur, lining up with the fundamentals, and to when to differentiate when to and when not to, which comes with experience, I suppose.
It's actually really interesting that you say that too, Bashi, in terms of like how you use the Edge Finder. We had somebody come on the show recently. You may have been watching when this happened, but it was Daniel Prop Firm Kid, if you've heard of him. He came on the show, and he too is mostly a 15-minute chart or less day trader, scalper, and he trades gold a lot. And he came on the show, and I spent some time chatting with him, and I asked him a little bit of like, how does he use the Edge Finder? Because I know he also is an Edge Finder user. We get questions all the time. People say, is this applicable to day traders? And clearly, I've met a lot of day traders using the Edge Finder. The Edge Finder is not built specifically for any time frame. It can be used for scalping, for day trading, for swing trading, for long-term trading. But it sounds like what I've heard from the scalpers, the short-term traders that are out there using it, they're using it as a bit of a higher time frame kind of filter, and then they incorporate it into their system. So like, for example, Daniel, who mentioned this, I just know he trades a lot of gold. He mentions that like if gold is getting a very bullish reading, he might look more for bullish setups that marry up with his system. But what I like what you just mentioned is, let's just say you were trading gold, just for the sake of example here, and you find a bullish setup. You just mentioned maybe you're going to be more inclined in that circumstance to let a little bit more of the trade run, maybe let some of the fundamentals play out. I find that fascinating. That's just another way that, again, the tool here, the purpose of the tool is really quite simply, like you said, to give a bit of a filter to traders who know the fundamentals do play a big role in what direction the markets are likely to move. But even to someone who's down on the 1 minute, 5 minute, 15-minute charts, the overall big picture direction can still be kind of looked into with the top setups algorithm, just looking at the economic data. So I love that. So you would say in terms of your execution, you're mostly down on the 1 minute time frame, but you do use a multi-time frame analysis. Do you ever go higher than the 15-minute chart?
So because I'm trading liquidity sweeps, for example, ultimately, if I was to, let's say, go on the 1 hour, there is going to be points where it's valid, because from here, the sweep that happened on Monday's high, if price did come higher and take that Asia high, price can do anything. It does what it wants to do. I need to adapt to that. So I'm going to go on the higher time frame, just because the M15 might not give me the candlesticks I need to see, or go back in time as far as I need to. So I might go on the 4 hour, for example, and realize, okay, there might be a zone over here. There might be a supply or a demand zone, because I trade supply and demand in line with liquidity sweeps. The more confluences, the better it is, the higher probability it is and stuff. So I do rarely use 4 hour daily, but it's mainly the 1 hour at highest. I'm really comfortable with the M15, M5 for every single day. So I'll wake up, M15 is the one I start off at. If I need to get a bigger outlook on things, then I normally go up to the 1 hour, which gives me normally enough insight into the market.
Yeah, no, I love it. And so of the charts that you watch, what do you find yourself trading the most? Is it mostly pound dollar, pound yen? Which I guess, do you have favorites, and what does your watch list look like?
I definitely have a favorite, GBP-CHF. People underrate that. I love that pair so much. Just because on the M1 time frame, it can get quite noisy, right? With the M1, there's a lot going on, so you need to decipher a lot. Now, from my experiences, and me having a mechanical setup of, TPs and everything's very data driven, it's very mechanical. What I realized, the cleanest price action oftentimes is GBP-CHF. So that's my favorite pair, but it's a double-edged sword, because I trade the M1. I need to focus on spreads, and my average stop loss is between 2 and 4 pips, so it's a really tight stop
Wow.
loss. Yeah, and sometimes on GBP CHF in London Open, the volume starts to kick in. With my broker IC Markets, the spreads can go up to about 0.7, 0.8 pips, which could then, if you're thinking I've got 2 pip SL and I'm risking 1%, and the spread is 0.8 of that, that's exposing my risk even more just in spreads. So that it is a double-edged sword. But GBP CHF is my favorite. After that is GU. I love GU. And the GBP yen. I've been a yen fan for a while. I even called yen strength about a couple of months ago when yen started the rate hike. I think I said it to James, FOREX James. I just want to mention that this is interesting because the yen's in deflation, and it's been like that for a long time. For them to do rate hike, that's uncharted territory. So I just had a feeling it just caused the yen bullishness. But yeah, GBP pairs, I quite like them.
Yeah, no, they are certainly of the currency world. They move quite a bit, and in terms of a scalper's kind of perspective, the pairs that move a lot make a lot of sense to want to trade them, simply because, as you mentioned, if your stop loss is very tight and you're in and out of a lot of trades, that can obviously add up and be very costly as a low time frame trader. But if you have something that does typically move a lot more, or volatility is much higher in a certain currency pair, that can be a more cost efficient way, in a weird way. Like, even though euro dollar technically has like the tightest spreads for the most part, if euro dollar is not moving as much as, let's say pound yen, if spreads are tight on pound yen and it's moving a ton and you catch the right trade, that spread that you're paying to the brokerage, you want it to be as minimal compared to the price movements that you're getting. That is really the ultimate goal. So pound pairs are oftentimes the kind of low time frame traders' favorites, simply because you can get those kind of big moves that make the spread relatively more cost effective to trade. So it makes a lot of sense. And you mentioned briefly you sometimes will trade metals. Are you watching gold at all right now?
Well, so normally with gold, I try to trade New York session, but honestly, Trump and New York right now, trading the M1, I don't really want to go there. Just because with the spreads can widen so much when Trump speaks or says something in the London session, that it's quite risky for me to trade London at the New York at the moment. So normally I would trade New York, but I think it's going to be a calculated decision to just stay on the sidelines for a few months, let things settle, find out what's going on with the tariffs, find out what's going on with Russia, Ukraine, and the whole situation in the Middle East. Let there be a bit of stability, and then I might go back into New York session. So with gold being as volatile as what it is, and me trading the M1 even on gold, my SL on gold is like 7 to 9, 10 pips on gold, which is really, really tight on gold.
Yeah.
And I still target like high risk rewards. I still target like a 10-hour trade, so 100 pip move. But to have Trump in presidency right now, it's a bit scary. I'm not gonna lie. I picked a hard year to start trading.
It is. It's definitely, when you get more volatility, it can be a big shocker to a lot of people and a lot of people's strategies. It's regardless of what it is, whether it be a change in administration or a war breaking out or inflation fears, there's kind of always something that can cause markets to suddenly get more volatile. And so we're seeing a little bit of that. Though, to be fair, it's a lot less volatile than I actually even thought it would be, to be completely honest. Like, a change in an administration, usually, regardless of who the new president is, usually there's like a period of volatility following it. So I don't blame you or many other people who are kind of like, I'm going to stay on the sidelines, wait for things to at least kind of settle out to a degree before getting back into trading gold. But that is actually a seasonal phenomenon that's quite interesting. The first year of a presidency, the first half of the first year, is usually a choppy kind of volatile period for many markets. So really interesting to see. And what about indices? Do you ever look at them, or not really on your radar?
Since I've come down to the M1 and I've got my 4 main pairs, I just kind of stick to these, to be honest. My strategy does work on Nasdaq, does work on US 30. I never tried S&P 500 though, but I know it works on Nasdaq and US 30. But it just comes down to when you're analyzing the pairs, it can take a lot of time because you have to analyze what happened in Asia, what happened pre-Asia, and then you're straight on the charts in London Open looking for that move. So it can be quite intense. So it's hard to manage a lot of pairs because before I was looking at 8 pairs. I had gold in there, silver in there, Nasdaq US 30, and I had UJ, and I was just missing so many trades because it takes 10-15 minutes per analysis, right? And it's like you got to find the happy medium.
Sure.
And for me, it's kind of 4 pairs is the happy medium, to be honest. But if volume ever died out in the Forex pairs, I'm flexible where I can just hop onto commodities or have a look at gold, have a look at silver, or go into some indices and see what's going on there. So it's good to have something that's flexible. Because with Forex, for example, the dollar, EU, GU, if you got a ranging based day and your strategy requires momentum and movement, you're kind of stuck. So it's good to be flexible and adaptable in the markets.
Sure. And you've got on your screen here, Bash, you've got DXY. Do you use that at all as part of your analysis?
Yeah, I do. Because I trade EU and GU, I do use DXY a lot. My analysis on DXY is quite simple. I just look for key areas. So, for example, we can see some right here. So it's just an area where a lot of support resistance levels are, or breakout retest levels. It just seems to respect really good on the daily time frame. I think it's kind of similar to Forex's James view, and I think probably yourself as well, the way you kind of view DXY is looking at those levels where there's a lot of action or activity. For example, right now we can even see something on something kind of like see something around here as well, to be honest. For us to go back. Yeah, see, even this is a key level right here. So the 106.7 to the 107.5, even that's a key area. And what we're seeing, we find support here. So it makes sense that, key levels are valid. And that's kind of what we use on the DXY for the daily, to be honest. Just to find out, are we coming into a level of support resistance? Where are we right now in the DXY?
Yeah, the dollar index has been especially interesting here recently. It's been on this kind of impossible uptrend to defeat, and now starting to roll over a little bit. We'll see if that has any kind of lasting effects there. Okay, so one other bonus chart. Do you ever looked at crypto? I ask pretty much everybody who comes on, do you hold any crypto? Do you trade any? What are your thoughts on it? Are you a bull? Are you a bear? What are your thoughts?
Crypto. So it's not something I've ever delved into. I've always felt like crypto is one of those manipulated markets because you could just get a big order in there and move the market a lot. It's not as stable, I feel, as Forex, in my opinion. And it's very volatile. I think that for me, I like volatility for sure, but I don't want to be in a what can I put it, in an asset where it's so volatile that it'll just wick me out and the spread will just destroy me as well. So I think with the Bitcoin on the M1, it'd be a bit dangerous, but I think it's got legs though, for sure. For example, if you're a profitable trader and you've got somewhere you want to park your money, I think it'd be great to invest into crypto and hold it for the long run. So more of a position style of trading. I think that'd be quite good, to be honest. I would love to see a pullback on crypto, but I know it's been running for a while and I haven't had a look at it recently. Let's have a look now.
Yeah, I mean, that's the thing about Bitcoin is I've had people on the show. Some people are long-term believers, others are long-term disbelievers, and other times people just rent the space. I would say I kind of fall in that category where I'm not necessarily a forever buy and hold kind of trader when it comes to crypto, but I certainly will rent it, quote unquote, or trade it if I can find the right setup and right momentum. But it's one of those things too. You have to kind of, for me, go where the buffalo is when I'm quote unquote hunting for setups. And right now, Bitcoin is really range bound. We're just kind of staying sideways. But it's one of those things you got to look for. In my opinion, we want that volatility, but we want that volatility to kind of be trending, following through in some direction so that we can actually take advantage of a setup. So another question for you too, in terms of your trading style, you're trading the lower time frames. Are you mostly a reversals trader, pullback trader, trend following trader? How would you qualify yourself if somebody asks what kind of trader are you beyond just the time frame you use?
Mm, it's hard to say because with my strategy, it works on counter trend as well. Because you're analyzing Asia and what Asia swept. So when you're trading the M1, you don't really see much of a trend there. Whereas if you're on the M15 or the 4-hour or the hour, on the bigger picture, you see a clear trend. Like here, you can see a clear trend there. Whereas when you're on the M1, you're just kind of looking at price action on that day and probably the day before, realistically. But this is where Asia comes into it. Asia is a huge part of my strategy because that's kind of telling us the direction or the intention of where the market wants to go.
Sure.
So I don't really know what to call myself, to be honest, because I don't really, focus on pro trend or anti or just anti-trend reversals because it's just the session volume, really, the London session volume or the New York session volume. I'm normally in the market for an hour and a half max, 2 hours rarely. So I don't
Well,
really know.
here's a question. Here's maybe a way you could kind of identify it, because a lot of times when I've spoken with traders who trade some sort of liquidity sweep, I would actually quantify them a little bit more of at least the trade setup that they're looking for, right? An idea of it going one way and then snapping back the other way, faking out a lot of traders. That concept, I would say, is kind of a reversal trading methodology. That being said, it can be used in the context of a trend. For example, let's say this idea, let's just for fun, let's say that you had a support level drawn here and you have this big fake out, and then we rip back through those areas and you take that long position. It's kind of a reversal trade in the context of an overall trend. So you can, the actual execution might be reversal trading. I mean, which I would argue is most pullback trading. If you're trying to trade a pullback to any extent, you're kind of taking a reversal trade on a lower time frame and a trend following trade on the higher time frame if you're, looking at the higher time frame context. So it's a little bit I understand if you're trading those kind of reversals, that is a reversal entry, but it depends what the overall context is as well. So here's another way of asking it. Do you like when a market is like, if you're looking at, you mentioned you really like pound Swiss, GBP, CHF. If we look at pound Swiss,
range bound.
yeah, it's mostly range bound, which might actually serve well, where if you're like, okay, I identify that, we were in a range in this area, then you're looking for a fake out of that. You're trading back into that. On the daily chart, pound Swiss and most Swiss pairs, by the way, are a bit range bound like that. They kind of trend one way and then they quickly reverse and trend back the other way, and vice versa. So yeah, I mean, trend following, there's not like one size fits all. I know profitable swing traders who are reversal based or trend following based. So I would say you're a little bit more closely aligned to reversals, but still taking into consideration the higher time frame context, which I love.
Yeah, I mean, well, to be honest, Nick, when you're trading the M1, anything is classed as higher time frame, so you can always find a pro trend bias on some time frame.
Yeah, no, that's actually a great point too.
Yeah.
No, it makes a lot of sense. Well, Bashi, you've been watching the stream for a while. Obviously, you also incorporate the Edge Finder into what you're doing, and you're also starting your own YouTube channel. Is that right? Is it brand new? How did you just create it?
So this channel is kind of my car content channel. So I started streaming on here a few days ago, did a couple live streams of me trading London sessions. So being completely transparent, whether I miss a trade, whether I take a trade, whether I hit SL, just raw transparency. So yeah, I'm thinking about kickstarting a new channel just based on trading itself, so I don't get things mixed up together and stuff. So hopefully in the next few days, couple of weeks, maybe I might kickstart a new channel just dedicated to trading, whether it be psychological advice, because I love psychology. I think that's my strongest point as a trader, is emotional control. Because when you're trading M1, it's so fast-paced and volatile and manipulative, and you just have to really have a serious level of self-control. So yeah, there's going to be content there for sure, but I think I'd love to do more psychology-based content, so it can help every trader, not just technical, not just fundamental. It's going to be used broadly.
Yeah, I love it. Well, Bashi, again, I want to thank you for coming on here today, and also just for your long-term supporter ship, I suppose, of the show. I
Yeah.
wish you the best with both your trading and also with your YouTube venture, whether you start streaming more or creating psychological content for traders, whatever you do. I wish you the best in it. And thank you very much for coming on and sharing a little bit of your experience, your story, as both a trader and a contributor here to the A1 Trading Show, both in the form of being a viewer and now coming on as a guest. So thank you very much for joining me, man.
Yeah, thank you. Thanks to everyone, James, yourself, Chandler, all the guys in the chat, especially Alan. Seeing Alan come on here kind of like gave me a bit of motivation to be like, you know what, Alan's done it, let's have a go type thing. And you guys are really accommodating. If anyone wants to do it, you know, the guys are so helpful, really easy, relaxed. And yeah, I just appreciate it. Thank you, Nick.
Yeah, well, you're very welcome. Thank you very much for coming on. We've shared the link to your existing YouTube channel just in case people would like to reach out to you or find some of your car content. I might check some of that out myself. So, Bashi,
Yeah,
thank you
go
very
ahead.
much for coming on, and we'll see you next time, man.
Yeah, peace out. Thanks, guys. Bye.
See ya. All right, guys. Yes, great to hear from Bashi. And that makes the second person who's actually, well, no, I got to take it back. That's the third person to ever come from our live chat and come onto camera and be a part of our crew here, right? On the A1 Trading Show, it is a rotation of traders and people that from all over the planet that kind of make up what we do here. The third person, by the way, you mentioned Bashi mentioned Alan himself, but of course, actually Ivan a long time ago was a regular stream viewer, and he would heckle me every single day, and I really hated him, and so I eventually asked him to come on, and now he's on every week. Just kidding. I don't hate Ivan. Don't tell him that. He might show up on my doorstep, but it would be a long way because he's Norwegian, now living in Kenya. So, you know, if he ever makes a stop in Georgia. But anyways, guys, we've got show's running strong here today. We've got plans to go all the way up to the meeting minutes that are happening in about an hour and 10 minutes. I do want to just make sure that everybody who's watching right now, if you have not already joined the Telegram channel, it is free to join. We're doing a giveaway for the Edge Finder right now. If that's something you'd like a chance to win, here's how you can join for a chance to win. It is really simple. Join our Telegram channel, and we just dropped this link. We're giving away a copy of the Edge Finder for free. Just take a second to drop your name in the hat, and who knows, you might be the winner of a free copy of the Edge Finder, and you'll definitely be a winner of some great free content that you can find on Telegram. We post videos and articles and course material. Also, to anybody in the chat who doesn't appreciate a certain viewer, whether it be any of the guests, whether it be myself, whether it be anybody, keep it to yourself. It's a lot easier to sit and throw popcorn at people than to show up on camera and to try and put value into the world. Don't be a hater. That's loser mentality. We're not here for that. And this is not the stream for you. If you're a hater, move on. Have a great day. And we won't see you next time. But let's get back into some more charts here. I loved that, you know, when Bashi was talking about, he talked about kind of isolating a couple of charts that he likes best. He likes some of the pound pairs, pound Swiss, pound yen. I love hearing from new traders, new thoughts, because everybody trades the markets a little bit differently. I've done this for a long time. I've spoken with a lot of traders all around the planet, people of different styles, time frames, things they trade, futures traders, options traders, Forex traders. I feel like I've done it all. It's been awesome. But the cool thing is, one of the common traits to people who are successful in this stuff is just embracing the idea that they don't know everything, that there is multiple ways to finding profitability in the markets. But I just think it's important that, you know, when you're on your own journey, find your own path to trading success. If you try and copy your way, if you try and, you know, look for shortcuts, it just never ends well. It's really one of those things. There's no real way to cheat your way to trading profitability. You may think like, oh, I can just, you know, get prop firm funded in a couple months. Gosh, how many times have I heard that from people? How many times have you heard from people, I'm just going to I've discovered prop firms. Nobody has heard of these things. I'm going to get funded with a bunch of millions of dollars, and I'm going to be making, 10, 15 grand a month. And literally you start whipping out the calculator. If I can do 1% returns on this funding program's capital, I'm going to be making this payout every month. And you know how it is. A lot of traders do this, right? It's just way harder than you think it is. And the second you accept that it is hard, things start to light up for you. That's the thing. The second you start saying, okay, yeah, that was a foolish idea of mine to think I'm going to make 10 grand in payouts from prop firms really quick, really easy, right? There's no money in the world that's free. Nothing is free. It's all hard. Trading, definitely not on the hard or on the easy side. Anyways, a little bit of an update. Markets are flat here. S&P, Nasdaq, Dow Jones slightly lower, Russell slightly lower. The DAX down 2% now. I also wanted to check in on some of my stocks here today. I'm trading NVIDIA. I have a couple positions on here. I am long NVIDIA shares. I have 100 shares long of NVIDIA. I also shorted calls on NVIDIA at 150. And I also shorted puts on NVIDIA at 110. So I make peak money if it goes right here and stops by expiration March 14th of 2025. I also closed out for a profit today my Tesla short put position. We had a nice bounce here. I'll show you. Let me see if I can pull this up for you. So closing out for a $477 gain. I closed this in between coming back onto the stream. I shorted puts on Tesla, which is a bullish bet, right? When you short puts on something, you're selling another trader out in the world a bearish bet. Some other trader in the world wanted to make a bearish bet on Tesla, betting that it would go down to $330 or less by expiration. Expiration is 28th of February. Today, as we've bounced back on Tesla here from the lows, which is, by the way, one of my favorite, Tesla is one of my favorite things of all time to trade. I'm not talking of stocks, of Forex, of indices. Tesla is one of my favorite things. It is one of my most profitable things I've ever traded in my trading career. I've sold a ton of options on Tesla. I've longed the stock. I've been a long-term bull. And that's probably why I've made so much money in this stock, is because long-term, I've been very, very bullish and very correct about Tesla. Now, there's other things that I've not been so correct about. So I'm bragging right now, but understand I'm not always right. I'm certainly not always right. There's things that I've been dead wrong about. But part of the reason Tesla has been so profitable for me is because I was very bullish in 2020 and 2021. I closed out a lot of my longs as we started to fade that momentum into 2022, which was one of the best calls I could have made because it dropped substantially. I traded it all through this time, bullish, shorted options on it, and then established another long position in this area. You can see my average cost around $229 per share. It's one of my favorite things I've ever traded because what I love about having, and I've been talking about this a lot on the channel here recently, a portfolio approach to your trading. What that means is that I often think about this, right? Long term, I like Tesla to the upside. So as that is my basis, right? Long term, I think Tesla goes higher. Okay. That's an investing mindset, but I'm not a buy and hold investor. I actually don't buy and hold. I don't buy and hold pretty much anything. I have very little things. I'm trying to think if there's anything in my portfolio right now that is literally untouched. And the answer is no. I have nothing in my portfolio that I might, like, for example, I love Uber. Uber is a stock I want to hold forever. But I'm too much of a trader to not sell calls if I think it's getting overbought or sell puts if I think it's getting oversold. So I really don't hold anything forever. but I trade in and out of stuff, and I've made a lot of money on Tesla trading in and out of this position. But I ended up, like I said, I shorted puts here, and we're looking at a weekly chart. Let's drop to the daily. With this bounce back, I decided to cover those shorts because I do think that Tesla's struggling here with a little bit of downward momentum. Like, let's pull up Tesla just for a second, and let's pull up our trend here, our momentum filter. You can see it is seriously down. Tesla's momentum has really faded. But I'm curious if we get some sort of breakout here, that would be great for the stock. I'd be looking for continuation. Like I said, I already have long shares around, what do we say? What was my average cost? $229.50. I would like to add more to my position. I would like to get probably 300 shares of Tesla. That'd be kind of my ideal positioning, what I would call a quote unquote full position on Tesla. If I could get that, I would like to establish it. If we see another leg lower, excellent. From a long-term basis, from a long-term perspective, I'd love to add some shares under $300. If we get Tesla to roll over further, I'll be able to go shopping, pick up some shares on what I believe to be the long-term winner in the robotics world. Tesla is a car company, but I think it's also a robotics company. I know Elon Musk is incredibly controversial, but I also think he's brilliant. Regardless of, I actually have been vocally kind of against him being so involved in politics. I really think his best role is being a tech billionaire and building cool stuff for humanity. I think long term, here's my opinion on Elon Musk. I think long term, that's where he's going to go back to. I hope this detour into politics is not forever, because I would like to, as a Tesla shareholder, I'd like to see him back at the helm of Tesla and leading the robotics revolution and automation and AI and all that stuff. XAI is a beast. They're launching Grok 3.0. It's already ranking stronger than ChatGPT and DeepSeek. And again, regardless of, I have liked Elon Musk as an executor of business stuff for a very long time. Do I find him to be the most perfect, ethical, moral person that should be in politics? Not really, no. But again, I would love to see him get back in the driver's seat at Tesla, and I just think that is one of the greatest things that he could do for society. Would just be get back to. There was a time where Elon Musk was not so vocal on Twitter, and it wasn't so politically charged. It's hard to think that that's how he used to be. He used to just be straight up. A long time ago, everybody liked Elon. Well, not everybody. Nobody. Not at any point a billionaire is going to be disliked, but there was a time where he was not nearly as controversial. Bashi, yeah, no, it was great having you on. Appreciate you coming on and sharing your thoughts with us. It was really cool. Gold, silver, taking a little bit of a breather here today. Silver, I'm feeling good about my silver trade. Good in the sense that I just know what I'm supposed to do here. I know, look, the trade can go one way or the other. It can keep going, which I'd prefer this, or it can reverse. And if it reverses and breaks momentum, look, I have this indicator on the screen right now. And I love it. I love this indicator. Here's why. It's so stupid simple. It's using a 3 and a 14 moving average, and it's the A1 momentum indicator. You can get it on our website, a1trading.com. Also, Chandler or James, if you could drop the link to our support chat. If you guys want the indicator, send us a DM. They'll help you get set up with the A1 momentum indicator on our live chat. If you'd like to get access to this for your trading view. Why do I keep showing it on my screen? It's because This is the same system used by the edge finder. You want me to show you how this calculates? So the edge finder scoring system operates on multiple columns, but let's think about the trend column, which is one of two of the technical reads that the edge finder uses to filter for trades. Let's look at gold, which is getting a +2 score, and let's understand this together. So we're getting into the weeds with it today, but let's go take a look at gold and understand why the edge finder is giving this a +2 trend reading. So that means 2 additional points get credited towards the scoring for gold simply because it's trending higher like this. It's pretty obvious when you look at the screen that gold is in an uptrend. But why do we score it this way? How is it getting a +2? Where is that +2 coming from? Here is how. First, is the 3 moving average above the 14 moving average? If so, give it a +1. If not, give it a -1. Really simple. The second clause that the edge finder, and this is all done automatically, the system calculates this internally, is the slope of the 14 moving average positive? If the answer is yes, +1. Otherwise, -1. So what you're seeing here is that we can ask these 2 questions, and then let's do our example. Is the 3 moving average above the 14? Yes. As illustrated visually by the green film on the screen right here. That is just telling you that the 3-day moving average is trending up at a rapid pace, more so than the 14-day moving average. No rocket science here, no magic, no holy grails for sale. I'm just showing you how our system calculates trend. The second part is look at the orange line. The orange line we can take a look at for clause 2, the slope. Is this angled upwards? I'm going to sneeze, hold on. If it's angled upwards, give it another point. So in this case, gold is getting a +2, right? +2 trend. That's how that works. Love the channel, but you're biased when you pretend Elon's character isn't fit for politics. When do politicians have character? Come on, man. Jim, I really don't comment that much on politics because people can't. It's like, it's this weird thing. You talk politics, people can't even, they start saying like, oh, I've lost respect for you because you have this opinion. Like, see, that's the crazy thing about politics. They're so divisive. Just crazy. But anyways, silver trend also looks good. So we have a +2 for gold. So the trend to the upside looks good for both. And that is just part of the thing. Again, that's one component of the full systematic scoring that we have here. We're also, the system's looking at retail sales, how it could impact gold, how it could impact certain currencies, indices, etc. Same thing with inflation, same thing with employment change, unemployment rate, interest rates, commitment of traders data. It's filtering all of this data and generating bullish or bearish ideas. Dow Jones, and see, when I talk about the indices too, like S&P, Nasdaq, Dow Jones, they are getting some good momentum here forming. But what I don't love about like Nas, for example, is you're sitting at the all-time high. You've pushed up. it's not that I don't think it can go higher, but I just don't love the same. I don't have the same confirmation list that I do for like gold right now. So if Nasdaq was getting me a bullish reading and most things were favoring upside for the Nas, then I'd love it. I mean, we can go look at indices here for a second. And you can see like S&P 500 is actually getting a -4 rating. A lot of the economic data here recently is not super favorable for, in my opinion, stocks to keep going higher. I'm not bullish or bearish. I'm just kind of neutral, as the edge finder is, right? We could also take a look at the Nas, which is even more neutral than the S&P. You can see almost everything here favors kind of the bearish side for the economic data. CPI was hot. Core CPI was hot. NFP missed a little bit, although revisions were good. Unemployment rate was good, strong for the jobs market. It actually came down. Retail sales came in a lot lower than anticipated. Services PMI missed. So yeah, I just don't love the backdrop as much for stocks in the US. That being said, I do have, if I am remembering correctly, some other stock markets are looking interesting. You've got DAX on the radar, Nikkei, and the FTSE. Let's go look at foreign stock markets. Why not? Let's go see what's going on with stocks in other places. Here's the German DAX. We drew this earlier today. I like the 61.8% retracement. This actually could be an interesting trade for me. Japanese stock market, a little bit too range bound for my liking. Yeah, I mean, that's a choppy chart. Look at that. Just back and forth. Probably not for me. Nick, gold is melting. Let's go look. I would not call that melting. It's melting up. No, gold looks really strong. We'll see if it cracks that strength. But I think, like I said, in terms of momentum, I would need to see something like this. I'd need to see these levels start to fail out. It could go lower, right? Anything can happen in markets. I think it's more likely to continue than to reverse. But that's not ever a certainty. So gold, same thing with silver. I mentioned this a second ago, but before I went on the explanation for the trend filter that we use, I was mentioning that I'm feeling really good with where the silver trade is. So let me clarify that. I have my moving average / my key support identified. I know where I have a pretty good systematic definition for myself of where momentum is breaking. If we come down here and we retest the lows of this candle and can't immediately hold that area, any break below that area, it's time to get out. Momentum in that situation, I would call finished. So the reason I feel really good with where I'm at is because now I can't lose money on the trade, right? I'm not going to lose money on my silver trade because my stop loss has been moved into profit. And so if we get this big fat red candle today, I'm just going to stop out and take profits. So I'm in a situation where I can't lose money on the trade. And it's just a matter of if it can continue, then great. I can look to tighten my stop loss further. Like let's just say that we've swept this kind of this move intraday lower, and let's just say by going into tomorrow's action, we're doing this move. If that happens, then I can go ahead and continue to trail my stop further in. Definitely having a bit of a pullback, but I would definitely not say that silver, gold are, I guess if you're looking at it like on a 5-minute chart, it's had a bit of a sell-off. But I mostly stick to the daily chart where silver and gold both look great. Man, the DAX, however, that's a big sell-off. 2.12% for the day. S&P, is this going to be our 1, 2, 3, 4th day in a row of just kind of going nowhere slightly higher? Very interesting. Make sure, guys, if you are just tuning into the stream, make sure to join our free to join Edge Finder giveaway. It's been dropped in the Telegram channel, which will link that here in the chat for you. And also, just to go back to, so like I said, yeah, just join this link here, join the free Telegram channel, and then just you can apply if you want for a chance to win. If you don't already have the Edge Finder, you want a chance to win one for free, just click that link, put your email in the hat, and you might get selected. So to go back just for a second on the Elon Musk stuff, right? I respect Elon Musk in terms of his business perspective. I just made the point that I think it's kind of like Oprah, right? When Oprah was talking about running for president, it's like immediately the most ugly kind of stuff started surfacing about, oh, Oprah did this. It's like politics are just so ugly. They bring out the worst in so many people. But I was making the point that I think Elon Musk is a really smart dude and a really, strong business person. Clearly, he's like a bajillionaire. As a Tesla shareholder, my hope is that he at some point kind of steps away from being involved so heavily in the politics world and comes back to running what I think has to be one of the most potentially human game-changing companies in the world. The Optimus robots Tesla's working on, SpaceX stuff. I'm a believer in all that. I love the Tesla car, the Tesla batteries, the technology, the XAI stuff. That I hope that focus doesn't get taken away from. And I think that's part of the reason, by the way, some of the Tesla downside moves that we've recently seen have been going on, is there is a bit of shared concern, not just from myself, but from other Tesla believers, Tesla investors, that his attention being pulled away. The question is, does that hurt the stock? My opinion is he'll always come back to Tesla. It's my opinion. I could be wrong. And so when I see a big sell-off in the stock, I usually buy some. So again, I'm not making political commentary. I do think that Elon Musk should focus up a little bit more on his stuff. I totally understand. I respect the idea. I think most people, actually both sides, bipartisan, agree that improving the efficiency of the government is a good thing. Where people would disagree is the methodology of how that gets done. It's a bit of an aggressive approach. Some people love it. Some people hate it the way it's currently happening. But the idea of finding efficiency in the government is a good thing. But what gets cut and who gets cut and what that means for people and how it approaches, that's all, of course, where it gets, where it gets dicey. Gold here now down about 0.5% on the day. I would actually love, if gold gives me a bigger pullback, I may look to, even though I'm already long silver, I may look to add a gold trade if I can find one. Is gold making Elliott wave on 4-hour time frame? Please check. I don't know. I don't really use Elliott waves. I use the simplest technical analysis in the book: support and resistance, market structure. And then I primarily rely on fundamental analysis to give me an idea of which direction I want to trade in. Let's check in our yen pair ideas. Swiss yen. Swiss yen's looking okay. I'm short Swiss yen as of a couple days back. I shorted on this candle here. We went sideways, now starting to roll over. I do think that the yen has a lot of strength, a lot of potential to continue. We've talked about this on the Japanese economic heat map. What's up, Nick? What's the name of your indicator? It's a custom one that we built called the A1 Momentum Indicator. If you want access to it, you can purchase it on our website. If you send us a direct message on our site, you can speak to our team and they can hook you up with the code. You basically purchase the code, you can drop it into your trading view, and then you have the indicator. So send us a direct message if that's something you're interested in, and our team can help you out. What will happen on the FOMC meeting today? Gold bullish or bearish? What do you think, bruh? Well, bruh, I don't know. I really don't. We'll see. If the Fed meeting minutes, which, by the way, I'm going to say this 17 times in the next 1 hour. The meeting minutes are simply a release of notes from a Fed committee meeting. Jerome Powell is not speaking. So people will come in on the live chat. I'm calling it now. They'll come onto the live chat and they'll say, Nick, pull up the stream. I want to see Jerome Powell. He's not speaking today, so that's not going to happen. Now, will meeting minutes cause any market movement? 80% chance, no. 80% chance there's not likely a big move. 20% chance they revise something that makes the market move a lot. And when I say revise, usually what happens is the meeting minutes get posted up, and anything that is found to be significantly different in terms of behind closed doors, what the committee was speaking about, which, remember, these are scribe notes essentially from a privately held meeting that the Fed does. If there's something significantly different from previously thought, like if they say inflation is becoming increasingly problematic and they start focusing, then the market may freak out a little bit. But we'll have to see. You know, that's the thing with meeting minutes. Most of the time, they don't move the markets that much. Sometimes they move the markets a lot. Appreciate you taking time taking the clarified take on Elon. That's completely reasonable. I think most people agree on most things. It's just the way social media turns everybody against each other in politics is crazy. Well, I take that back. Most people disagree on everything, but I think there's some like common ground that people just skip and they go to the extremes because social media kind of pushes people to the extremes on politics. As a content creator in the trading space, I talk a lot about what's happening in the world. For the last few years, it's been very focused on the Fed. But with Trump coming back into office, I kind of have to talk about what's going on that is happening on the fiscal side that could impact the market side. I am like constantly doing my very best. It is a fight to remain as unbiased and do my job here, which is to report on what's happening in the markets, what I think could be coming next for markets, given what we see happening, but to trade with my brain, not with my feelings of how I feel about certain politics or not, right? Because we all have thoughts and opinions about what's happening. I think that you kind of have to detach your political bias when you're trading fundamentals. That's a pitfall. Fundamentals, where you can go really, really wrong with them, is trading fundamentals and blending them with your political views, right? If you think that the markets are just going to be rosy from here because Trump is in office, or you think that the markets are going to collapse from here because Trump is in office, that is foolish mindset behavior. I'm telling you, that is not how you can't, that is foolish to think that way. The markets could absolutely rip for the next 4 years or we could have a really tough time in the next few years. But it's not all down to the president to determine that. There's a lot of stuff. There's a lot of forces beyond fiscal policy that move markets. For example, if China does this and it causes struggle over here, if Russia doesn't back down on Ukraine, how does that impact the world? If you're somebody who believes that because Trump is in office, the markets are going to be perfect, or you believe he's going to screw everything up, you're letting your political viewpoints completely dominate your fundamental analysis. You can't do that. That's why I've been reiterating over and over on the channel. Stick right here. Eye on the prize, eye on the ball, stay focused. We look at how the data numbers are, how the data and how the numbers are coming in. We don't look at headlines. We don't make our decisions off of whether you like or dislike Trump or whether you like or dislike Elon Musk. I guess I'm being hypocritical because I mentioned that I like his business track record. It's why part of the reason why I like Tesla. It's not the only reason. But barring that, for the most part, we're not going to make our decisions based on, oh, I think Trump's going to screw everything up, or, oh, I think Elon Musk is amazing and he's going to do this. And that's not, I just think that is such a speculative rabbit hole that many traders will fall into in the next couple of years. Don't let that be you. I'm telling you, like, let's stick to what we know here, which is this is the data and how it's falling. Our GDP numbers beating expectations or missing them? Right now, they're missing. You can complain all day long why certain things are happening or why who's to blame about this or what certain articles say, but it's not going to get you anywhere, right? Because that's not a very sustainable way to approach the markets. Chasing headlines is a really rough way to trade the markets. If we focus up on what is happening materially with inflation, what is happening with the jobs data, and what is happening with growth metrics and company earnings right now are rock solid. That's why the stock market hasn't fallen, because the stock market, the earnings in the market have been really strong despite high inflation and services PMIs, right? Despite some of that not being great, company earnings are still great. I think that mix is why you're getting a mixed stock market look. Why did gold move upwards in 2018? Lee, let me think about that for a second. (2018), the Fed started hiking rates, I think, in, oh shoot, I can't remember. I think they hiked rates in 2019. 2020 was obviously COVID. 2018, there was tariff concerns, I think, around that time, 2018, 2019. But really the big push for gold that occurred last time was summer of 2019. And then the big move was 2020 with the pandemic, which makes sense. People were just terrified about everything in the pandemic. Anyways, take a look at the U.S. economic heat map. Like I said, this is where I'm going to kind of stay focused on this year. I think we just focus on, for example, right now, a lot of our growth metrics kind of fall in this territory. They're slowing down a little bit. Meanwhile, inflation is still sticky. I wouldn't say that we are in stagflation. I've been talking about this a lot. I would say that we're kind of we're in like a Goldilocks scenario, but threatening to be turning directions towards more of a stagflation type of environment. So if we're looking at stagflation, right? If that's an environment that, by the way, I think that the UK is closer to stagflation than we are. Can we look at UK for a second? The UK is in a rough spot. Today they had 3% inflation. Their inflation this morning, which by the way, inflation rate, can we just change this really quick? We're going to do this because we can. I care too much. CPI year over year. I care too much about the Edge Finder to let that go on for another second. CPI year over year came in at 3% compared to forecast at 2.8%. Look, the UK's got an inflation issue, just like the US. The problem here is growth for the UK is not nearly where the US is at. So I actually think that the UK is actually dealing with potentially impending stagflation type stuff. It's rough for my UK friends, and I've got a good number of UK friends. I do a podcast with a friend. He's a friend now. I do a podcast episode twice a week with a guy in the UK, and he tells me about it all the time. He's like, inflation is it's a real problem, not only because inflation prices rising are no fun, but what the UK lacks that the US has is the US has strong jobs to a degree and pretty good earnings growth for a lot of companies, which means there's hiring, which means there's also good wage growth for US investors. Do we have wage growth on? Oh, we don't have wage growth? What are we doing? Wage growth is not an option here. We need, hold on. I have to write this down. Wage growth year over year. That needs to be on the economic heat map. We have pretty strong wage growth in the United States. Then you compare that to, like I said, you go to the UK economic heat map. I actually don't have that off the top of my head, but CPI is trending higher. PPI is trending higher. The issue here for the UK is that services PMI is at 50.8. Manufacturing PMI is in contraction, 48.3. GDP growth did come in higher than expected, but at 0.4% growth, 0.4% growth compared to the US's 2.3. There's a difference there. When the economy is expanding and growing, people get jobs, people get wage increases. GDP, guys, is important for company earnings. Company earnings are important for wage growth for the average person, right? Employed people want wage growth. And what the UK has struggled with for a long time, not like for the last year, for a long time, has been slow growth, but sticky inflation. We call that stagflation. And it's painful. So for people in the UK, I don't envy that situation. That's really hard. So when we look at a stagflation trend, that could weaken the currency. It could also make the stock market a little less attractive. Can we look at Europe's heat map? I haven't even looked really closely at the European heat map. Okay. So what about Europe? Okay, I thought that was 6.3% inflation for a second. Inflation rate. We're not doing this. We're not doing this. We're going to go here. We're going to go inflation rate, CPI. Okay. Okay, so CPI year over year, 2.5. It's not a 3% handle. So inflation is slightly ticking higher, but this is in a better situation than the US and than the UK. Retail sales, how's this looking? We missed here. PPI, we also missed. Unemployment rate went up. We missed there. Interest rates. Is this wrong? I'm pretty sure we cut interest rates. Am I going crazy? Somebody tell me, is ECB interest rate, is that at a 2.65? I don't think it's at 2.9. Somebody let me know. Somebody let me know. I've been streaming for too long. I don't think that's right, but I could be wrong. Did the ECB cut rates to 2.65? I thought they did. 2.75? Okay, you guys are just confusing me now. What is the current target rate for the ECB? Anyways, growth in Europe is also not great, 0.1%. It's rough. You know, long term it'd be cool to get like Asian markets in here too. Chinese stock market data, Japanese. Oh, I mean, not Japanese. Indian would be cool. That would be crazy. What's the point of your expensive software? I don't know. Don't buy it. Don't buy it. No, it's a lot of data and it's a lot of upkeep. And sometimes we still mess stuff up. So the Edge Finder is about, when did we start this? About 3 years into its development. We're coming up on our 3rd year of work on this project. We have added so much data in here, but it's not perfect. It's still constantly being finished. We just released the European economic heat map. So if that's not properly updating, then we'll get that fixed. The good news is, even if something is missing or has an issue, we're pretty quick to fix it. We've got a support line that's always open, and our dev team is pretty quick to handle tickets. So instead of claiming, Phoenix Capital, to answer your question, what's the point of expensive software? Instead of claiming we're perfect, it's magical, and you know, it's a holy grail system, we'll take the route of, we are super dedicated to making it every single day a little bit better. And doesn't mean it's going to be perfect every second. It's going to mess up. It's going to have bugs just like any software would, but we are super committed to making it as best as possible and improving it every day. But I do a lot of, during these live streams, a lot of our testing of the tools and features, because there's just so much data. There's so much data to pull in on the markets that it kind of requires constant maintenance and watching over to operate. But fortunately, there's 3 of us on the dev team, and we are always kind of playing around with it and working on it and fixing it and going through it. Tons of data in one location in an easy to read format. That's correct. That is why, you know, we have a lot of people around the world that use our tools. And the one cool thing I've got to say, one of the coolest things I should say with the Edge Finder is that we have had so much feedback, because we operate on social media and we build tools and we collect a lot of feedback from our customers. The tool has gotten so much better so quickly because we constantly survey and ask for feedback. And whenever we speak to somebody, we ask them how we can improve the tool. And that has helped us tremendously. The one amazing thing that I've found in the business, A1 trading business, but just in business in general. It's an amazing who would have thought process. But if you just listen to your customers and try and help them as much as you possibly can, it always comes back tenfold. And that is to anybody who owns a business or, has some sort of leadership role. I'm sure you have probably come to some sort of similar conclusion. The concept is crazy. Like, oh my gosh, go figure. If you really try and help people, then it really fires back, comes back tenfold to you. So let's see what else can we find in terms of setups. This Russell idea catches my eye. Last year, I actually made some decent returns, not a lot, and this was the only shorting that I did last year. The only shorting that I did last year was on the Russell. Last year, I shorted the Russell, and I'm not going to claim to be a hero on this because I think I made a couple great trades, and then I gave back a lot of the profits last year when I was shorting the Russell. Some of you guys might remember this, but it was like this really stop-start trade that's still going on for the Russell. You've had this very different, it's like a tale of two markets right now. If you take a look at the Nasdaq, right? The Nasdaq is pressing the highs over and over and over. It's had really a great couple years. Look at the Russell. By the way, all-time highs. Keep this in mind. All-time highs for the S&P 500 were overtaken December of 2023. Russell, look at this. All-time highs were only briefly overtaken November of 2024. And not only that, it hasn't even stayed above it, right? So the NASDAQ is a clear winner in terms of relative performance to the Russell. Why the divergence? Well, the Russell doesn't have as much of so here's the thing with the NASDAQ. NASDAQ has companies in it like Microsoft, Nvidia, Amazon, Apple, Google, Meta. These companies that are driving the earnings growth for the S&P 500. A ton of the earnings growth for the index has come from those top 10 companies. So the Russell is severely lacking those put the team on your back players, and that's why it's lacked the gains that the other ones have. The Russell is small cap companies. It's smaller companies. It's an index of 2,000 small companies. And they don't have a Google or an Nvidia that's just packed on a huge gain in regards to both price performance, but also earnings. They haven't had that kind of rebound. So the Russell has been kind of this back seat, kind of taking a back seat to all of the rallies that we've seen recently. And it's hard for me to really see a world where we get a massive change in nature of that until the Mag 7 take a longer break, right? They call this broadening out, the idea that the market can go from these, tech company bajillionaires, and those companies can perform okay, and the money can start flowing to other areas of the market, like the Russell, the Dow Jones, foreign stocks, places that have, or areas of the market that have lagged, right? They've lagged the NASDAQ. It's been hard to beat the NASDAQ in the last few years. If you've beaten the NASDAQ in the last few years, you've done exceptionally well, because the NASDAQ has been up 25+% for 2 years in a row. That's hard to beat. Granted, the Nasdaq also has years where it's down 30%. So it's not an easy, it's easy in hindsight to say, oh, I should just buy the Nasdaq. What am I doing? But the Nasdaq also has times where it's horrendous. For example, if you had bought in 2021 the Nasdaq, at one point you had a drawdown of 37%. And to get back to break even, it took you 730 days of trading. Just like if you had bought and held the Nasdaq, 730 days to get back to break even. And that's not even a really bad bear market. That was kind of a mild one in comparison to what's happened in history. Let's go to a bad period in the Nasdaq. Let's talk about 2008, the fabled horrendous time in the Nasdaq where tech stocks got killed. Look, if you had chased Nasdaq off a cliff, you ready for this one? A peak to trough drawdown of 55%, and to get back to break even on the Nas, it took you 1,190 days to get your money back to break even. That's not making any money. That's just back to break even. So the thing is, does it happen that often that the Nas has these kind of crashes? No, it's pretty infrequent. But they do happen. And the idea of just calling, it's just going to go up forever has been a good bet in the last 20 years. But there's also just times where you have to understand people have a kind of a recency bias. Here is the worst example that I can find in modern history. If you had bought the Nasdaq in March of 2000, you ready for this one? To get back to break even, no returns, it took you 5,539 days. So do stock market crashes happen that often? No. But when they happen, they can be a really long time before you get back to break even. Let alone what most people do is they trade with some kind of leverage. If you were leveraged, you blew out because not only did you lose all your value here, but if you had leverage positions that were costing you to hold, etc., that's a horrendous experience. This is people's entire wealth going away. That was an 83% drop. The worst, I think that might be the worst technology sell-off in stock market history. I think 83% at the index level. That's the scary thing. It does always recover. You're right, Xander. I'm not disagreeing with you, because I'm long-term a bull on tech stocks too. I just think that it's worth considering that if stocks have had a monumental run, let's at least wait for dips. Because here's the cool thing. Even in this bull market, dip, 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 there's dips that occur. So even if I'm bullish, could I buy it here? Yeah, sure. But what if I get stuck with 5,000 days of my money going to near zero? Eventually, does it come back? Definitely it does. Well, not even definitely. Most likely it does. But an 80% drop in your portfolio? I don't even know. It's also easy to just draw a line and say, oh, yeah, if you had held 5,000 freaking days. By the way, it wasn't even 5,000 days. It got worse than that. You were at break even as far as almost 6,000 days. How many years is that? 6,000 days? That's a long time. 2000 to 2016. 16 years. And you're still at break even. It's easy to say, oh yeah, it always comes back. That's true. I'm not saying that's not true. But to think, to be honest with ourselves and say, oh yeah, no, I would have held for 16 years. Does anybody else not fully know what they're going to be doing in 16 years? Gosh, I have no idea what I'm going to be doing in 16 years, right? Probably doing what we're doing right now. Hopefully. But that's just my point. You know, if you're here with me in the long term, if you're here going to be watching videos with me, streaming with me, trading with me for 10 years from now, we're going to see it, guys. We're going to see an ugly market downturn. It happens. Just when people believe it no longer happens, it happens. So just be aware of those types of crashes do occur. Doesn't mean that you should just hide and never invest or never be long stocks just because that can happen, but just be aware that that does happen. In fact, what that means is that when you get those really large sell-offs, trust me, it is hard to buy in those types of environments. And it sounds so easy. I'll just buy it when it's down. Do you know that most people, they did a study. I'm saying they because I don't know and I don't have the facts in front of me. Please just do your due diligence and look this up for yourself. But there was like a study that I saw one time and it stuck with me. Most of the time, timing the market's really difficult, right? But most of the people out there, the retail investor, times the market really poorly. And what I mean by that is they invest more funds after big run-ups and they invest less funds in market sell-offs. The simplest, dumbest investing strategy you could think about, in my opinion, would be to do the opposite. Breaks. I'm not investing more money personally. I have not invested more money in my main portfolio in a long time. Partially it's because of life circumstances. My wife and I are in the process of, we purchased a home and we are allocating most of our incomes pulled together into our mortgage payments and things like that. So there is that circumstance. But even if I had cash just sitting around, I probably wouldn't be just piling it into the Nasdaq because this is a trend. People tend to invest heavily in stocks and cryptos and things when they've already had big runs. And then they're timid, they're scared to do that when they hear that the stock market is selling off. Right? So just something to think about. What if they shorted it? A1 Central, I like your name, by the way. A1's cool. But here's the thing. This is a chart. This is why I don't short the NASDAQ. I shouldn't have to say another word. This is why I don't short the NASDAQ. Look at that thing. The percentage of time that it spends actually significantly moving lower is so small. That window, this tiny window here, tiny window here, tiny window. But for the most part, it goes up long term. So my opinion on indices, why I predominantly am bullish on indices, I call it cautiously bullish. I'm always cautiously bullish on indices. I look for opportunities, but cautious part implies that I don't look to buy things heavily when they've already had great runs. In terms of an investing standpoint, I should clarify, I'm not talking about trading here. From a trading perspective, I love buying all-time highs, right? There's nothing wrong with it. If I can find the right setup, I mean, I don't necessarily buy just because we hit an all-time high, but gold being at an all-time high does not scare me into saying, no, I can't buy in gold. Am I investing in gold right now? I'm not. No. I think you'll probably get some dips in gold that could be better long-term buys, in my personal opinion. But am I trading gold to the long side? Yeah, I am. I still like the setup. I think it could run for a couple weeks like this. Despite everybody's best, against kind of the crowd's mentality of it's got to come down, it's got to crash, it's gone too high, it's gonna sell off. It's interesting that all-time highs, oftentimes, from my experience, especially with gold, all-time highs are great indicators of new all-time highs coming. That's, again, it's not a very profound thing to say, because obviously if you're going to hit a new all-time high, you have to take out the old one. But what I'm trying to say is that oftentimes when you see a new high forming in gold, watch out, because a lot of times just new one. Look at how many all-time highs we've been hitting in gold. So that's something that I'm thinking about. With meeting minutes just 10 minutes out, we've got 978 people here. I do want to just mention that if you are a regular viewer of my show, we are doing a giveaway right now for the Edge Finder, which is our economics data and sentiment data screening software. If you do not have a copy of the Edge Finder, we're doing a free giveaway in our Telegram channel today. If you're not in there, take a second, click this link that's just been dropped in the chat. Make sure, load up the Telegram channel and navigate to this little panel here. We're giving away a free copy of the Edge Finder today. Enter for a chance to win. Click that link, throw your name in the hat, and you might be the winner. Is this a rerun? Yes. You might have to scroll up a little bit. Sorry about that. Actually, we'll do this here really quick. I'm just going to drop this, delete the old one. I'll just drop it to the bottom for those of you guys who are with us here live right now. Make sure, take a second, join the Telegram channel, and then enter for a chance to win the Edge Finder on that page. That's a lot of people. We've got a lot of people in our Telegram channel. We've been putting out a lot of cool stuff in the Telegram recently, like these charts. My good buddy, and he also works at my company, Frank, he puts out in our Telegram channel, the A1 Trading Telegram, he puts out tons of chart markups. He's also a macro trader. I like reading his commentary as well. He does a lot of our readable content for A1 Trading, so our email newsletters, our Telegram channel. Frank does a lot of the writing for us. So if you'd like to unlock some of that, I also drop stuff in the Telegram as well. If you'd like to unlock our analysis there for free, make sure, take a second. You can see we've actually been growing like crazy. This is a chart that is, we can do some technical analysis on the A1 Trading Telegram channel here. We were range bound here during the holidays. We recently broke out. Let's pump the stock. Pump the A1 Trading Telegram stock if you could for us, guys. We appreciate it. But yeah, we're dropping free course material in there. We're dropping daily analysis for free in there. And again, like I said, we're doing a giveaway on the Edge Finder. So make sure to throw your name in the hat for a chance to win. I am still long silver. It is, what positions do I have right now? I have a lot of stuff on the option side. I'm also long TLT. How's my TLT looking? It's not looking great. I'll tell you that. TLT has been kind of a dud. It's not, I'm down $3,000 on TLT. It's been sitting in my portfolio for a while. You do actually get paid a dividend for holding TLT long. So I actually have to check if I've collected a dividend, but I've been holding this thing for a while. So I bet you I have. A1 Telegram making a new all-time high. It is. Thank you, Bossy, thank you for helping us out. A1 Central, I love it. The name A1 Trading came from, I just thought it sounded cool, A1. And then I also loved that it would show up at the top of alphabetical order for everything. A1. You can't beat that. You probably could. I don't know what the technical alphabetical order logistics are, but it always shows up high on alphabetical order stuff just because of that. Let's look at my positions here a little bit more. So I have, let's take out the options for a second, just because that's a lot of what I'm doing. I'm long SLV, I'm long TLT, and I'm long Tesla, and I don't have any short calls on Tesla right now. These are my 3 positions that I don't have options on. If we want to look at the options side of things, I'm long semiconductors, Uber, ExxonMobil, Google, NVIDIA, and I have covered calls on all those positions. I also have short puts on several stocks: Fortinet, PayPal, ELF, IWM is the Russell. Russell's at 89% of max profit. But we'll see how silver plays out. I mean, silver's been doing this thing where it is respecting the momentum here really well. It's getting these intraday pullbacks, but buyers are stepping in. I'd love to see it do that again. If it can't hold momentum, stopping out under here for a profit. I've trailed my stop, so it's going to be a profitable position. We'll see how it goes. Not going to lie, watching your channel helped me a lot with being patient and trusting my ability. Shout out, Nick. I appreciate that. I'm glad that it has helped you in some way. Yeah. A1 sounds like a boy band. Thank you. We are actually a boy band with a few girls. A few ladies, I should say. They're the managers. Chandler, James, and I we wear makeup in the boy band. Chandler's on the mic. James is the drummer. Let's see. Gold down 0.34% here. I mean, it's a quiet week, man. We'll see, guys, if meeting minutes causes any serious market volatility. But I'm going to say I'm a little doubtful of that. Market's just so quiet. I guess the quiet nature has been really good for the options that I'm short right now. Nah, Frank's the bassist. Frank plays guitar and bass really well. In actuality, not joking, he actually does. You're a great boy band, though. Thank you. I appreciate it. Any ladies in the chat? Are there any ladies? I was saying earlier, I was speaking with someone on our team who is a lady, Emily. We were talking about I mentioned to her, I was like, she said, I'm not sure if this person is a guy or girl. And I just said, unfortunately, it's probably very likely that it's a guy, just because the trading space is so male dominated. I wish it wasn't. I honestly would love to see more ladies in the picture in the trading space. It would just be cool. It's been the same way for a long time. Since I've started trading, it's always been pretty male dominated. But lady traders, I would say they're on the rise. There's definitely more. Look at that. We got lots of lady traders in the house. That's awesome. You guys are giving us hope here. Jolma, hopefully I said your name correctly. Danielle, Smiley, Rosalind. Cool. Here every day. Love it. You know who I think is really great for the ladies of the trading space is Tori Trades. She is somehow very controversial, but I've seen her broker statements. That girl has broker statements to back her trading. And I think she's great for the trading space because I also think she gets a really hard job. She has been cast into virality. I made a lot of mistakes in my journey as a content creator when nobody was watching. So I was cringe or dumb. I still have my moments, but I did it all like with nobody watching and slowly have built up like a respectable community here, right? Tori has this, she gets a lot of stuff thrown at her. And a lot of the lady traders do this, unfortunately, too. They get a lot of heat. I don't really fully understand that. I do think this is important that you get more people involved. You want everybody involved in trading, and you know, gosh, like I love when my wife takes some time to listen to what I'm talking about in the markets. You know, guys, we want our girlfriends and wives to be involved to some degree, I would imagine. I think women have a tough time in trading. I actually think that women have some of the things that some of the guys lack. Like for example, I think that a lot of guys, myself included, have this like ego thing of like, we can figure it out so quick and it's going to be easy. And a lot of the female traders, not all of them, there of course are egotistical traders that struggle with the same psychological challenges. But it seems like they're more slow to start and they're more cautious with what they're doing. And that is so advantageous in trading. Gosh, I cannot imagine how much better off the trading space would be if people in general were slower to try live trading. They were slower to put 10 grand on the line. That's really a much better approach. Okay, guys, we have meeting minutes. They should be out. I'm just going to check on my end to see if I can find anything happening. Okay, Fed may need to pause, slow runoff until debt limit resolved. Fed inflation risks skewed upwards. Fed wants further progress on inflation before adjusting rates. Okay, nothing out of the ordinary so far. No major market reaction. Let me just switch over to this. Various Fed officials see potential for big swings in reserves. Few believe the Fed funds may not be far above neutral rates. Few believe that the Fed funds may not be far above neutral level. It's a confusing sentence. Okay, so Bitcoin not moving too much here. Gold slightly higher. NAS slightly green here. Dollar index slightly lower. Powell hasn't spoken. He's not going to speak today. The meeting minutes are just a document that gets released. Metals here, pretty unchanged. Still down slightly for gold and down a little bit here more for silver. U.S. stocks pretty much flat today. Dow Jones is down. Russell's down. NAS is flat. S&P is also flat. Dollar index was higher here this morning, giving back a little bit of those gains. No substantial movement in either direction right now, guys. I'm continuing just to see if I can find any more excitable news on this front. Short-term interest rate futures, little changed after release of Fed's January meeting minutes. So nothing drastic here. Is Trump speaking today? Trump has been all over the economic calendar here recently. I think the dude loves being on Forex Factory. Yeah, Trump is speaking today. Speak at the FII Priority Summit. Okay. What is the FII Priority Summit? Interesting. Interesting. We'll see if that. I still don't know what FII Priority Summit is, but is that where he was yesterday? Trump speaks every day. That's true. He probably says at least one word per day. At least. How would a gold repricing event affect other metals? I assume you're talking about like the Fort Knox stuff. If a Fort Knox audit situation became more real, like if that's actually going to happen, I think that most likely the dollar index would trend lower and gold, platinum, copper, silver would probably all go up on that news. I don't know that that's going to happen though. Like, I don't know how real, but Fort Knox has been audited in the past. So I don't know if you got a Fort Knox audit, it would be crazy. But here's the thing. I don't see a world. This is maybe even conspiratorial. I don't know. I don't see a world in which where they do an audit of Fort Knox and they come back and they reveal to the world that the amount of gold that's in Fort Knox doesn't match up. It would never happen, in my opinion. Because that would be the stupidest thing that would be like lighting yourself on fire, because it would tank U.S. credibility. So even if they found out something, this is my opinion. Look, I'm human. If I was in charge and in a Fort Knox audit happened and I found out that the amount of gold that we've told everyone and built the whole financial system on is not there, am I going to go announce that to the world? Hey, don't trust me. My books are all a lie. No way I'm telling the world that. Who would be foolish enough to say that? It would devastate the global financial system, in my opinion. And I'm not trying to scare anybody. That's just what I think would happen. So I think, in my opinion, no matter what, if there is an audit or there's not an audit, they would tell you. In actuality, I think that the release would be, oh yeah, there's plenty of gold in there. It would be really foolish to say anything other than that, even if it were not true. I'm not advocating for lying, but that data or that information being revealed would be horrible. You're a bad man, Nick. I don't know. That's an ethical question. Would you put yourself in that situation? Let's say you're the president and an audit of Fort Knox happens. They come to you and they say, look, Mr. or Mrs. President, there's no gold in there. I'm curious what you guys would do. You might say the ethical thing would be to say the truth. Is it? It would devastate many people. Their whole lives would come crashing down around them. The dollar would lose tons of value. Egg prices, you want to talk about complaining about egg prices? Egg prices would go up 100-fold. You'd have hyperinflation. It would be devastating. So what would you do? I don't know. I'm not the president, but I don't know. That's a crazy circumstance. Like, what would you do in that situation? Do you come out and say the truth? Oh yeah, we don't have any gold, and basically the U.S. is compromised overnight, and everyone struggles and suffers globally? Or do you say, yeah, the gold's in there, don't worry? I don't know. That's hard. Yeah, even if the lockers are empty, they won't disclose. It's a matter of credibility. I don't know. Maybe it's all in there. I don't know. But what my point is in making that video, if you guys saw my video yesterday where I talked about that concept of like, if they do an audit, the playbook, in my opinion, for that situation would be gold trends higher before the audit. This is me speculating. This is all guesswork, and you probably should ignore it. My guess would be if an audit's happening, gold would trend up before, then almost certainly they would say, yeah, there's gold in there, and gold would drop after. That would be my best educated guess of how to play gold in that circumstance. But who knows? That's a little bit of a conspiratorial, guesswork kind of approach. But I don't know. I think it would actually be really foolish to tell the world, if you found that there was less gold in there, you might be trying to play the hero by saying we should do an audit, with Elon Musk saying that, but then you could turn yourself into a massive villain if you found out and then either told the world and ruined the world, or found out and didn't tell the world and lied about it. I don't know. Yeah, bro, there's gold in there. Don't worry. Not sure how much, though. What if you opened it up? And they were those golden chocolate covered coins? Or no, chocolate coins covered in like the little gold wrapping. You open it up and they're like, all right, Mr. President or Mrs. President, here's what we got. And they open it up and it's just bags of those chocolate candies covered in coins. I think my eyes would be so wide. My eyes would just be, are you kidding me? I would, yeah, that's what I would do. I would, if they open up the vault, I would take a peek in. I'd see all that. My eyes would be so wide. I'd close the vault so fast, and I'd say, "Oh yeah, there's chocolate in there. There's gold in there." That's what I would do. I'd say, "Oh yeah, don't worry. There's gold in there, quote unquote." Anyways, speaking of gold, gold had a big update yesterday. Little bit of a minor pullback here. Let's drop it down to the hourly chart just for fun. This is your all-time high. Lower high. Kind of sitting here at support. We'll see how this level holds. Again, I'm a dip buyer on gold right now. I trade predominantly the daily chart though, and the 4-hour chart. So I would be more interested in a 4-hour chart pullback, maybe something like this, 2880. something like that could be interesting on the long side. On the daily chart, I like it as long as our momentum kind of continues to hold. We've got this moving average here. It's nothing magical, nothing fancy here. I just use a simple trend filter to get an idea of market direction. But really, I like gold bullish because my system is giving us a bullish reading after considering economic data, technical data, and sentiment data. So we look good. Overall, I'd say we look really good for gold to continue. As crazy as that may sound, so many people, you look around, everybody's calling for a pullback on gold. This thing is stretched, is overbought. I would not be surprised if you get minor pullbacks for us to continue to see buyers to step in and aggressively buy that dip. I think gold has more upside. I've been saying that. This is not something I'm trying to call a top on. And I'll sandbag here for a second, which is a new term that I've learned. I do sandbag sometimes. This idea of like cushioning your stance. I'm bullish on gold, and I do think it likely continues to go up. And here's the sandbag part. I don't know that for sure. And I don't bet like I know it for sure. I'm not heavily leveraged long buying this thing saying it's ripping higher here for sure. That's the mentality of someone who doesn't actually know what they're doing trading. It's a fascinating thing. I said it earlier in the stream. Bad traders believe strongly they know what's going to happen, and they bet like they know what's going to happen. And good traders don't believe that they know with certainty what's going to happen. They just have a bias, an educated guess, and they bet like it's an educated guess. Meaning, if you didn't know for sure, let's say you have a 55% chance gold moves the direction you think it's going to. Okay, that's a slight edge. You wouldn't gamble a ton of money on that. You'd take a small bet and you'd say, okay, if this one doesn't work out, I'll look for the next one. So I like gold to the upside. Despite already having moved a lot to the upside, I don't think that's a reason to get bearish. I think it can continue. When gold has big run-ups, it can continue for a lot longer than people think. Here was a huge run-up. I remember this. I remember trading this. Huge run-up. Sideways. People were like, oh, this thing is toast. Huge, even bigger run-up. 2025 looks good for gold so far. Maybe that changes, but right now it's not. I'm a momentum trader. I follow trends. I don't know where the trend is ending. I'm bullish until it changes directions. If it changes directions, sure. You'll hear me say something different, but I don't assume that I know where the top is on this. Same thing for silver. I'm long silver. I think it has room to continue. My stop loss is trailed into profit. I went long over here. Stop loss is now in profit on this position. So if it fades and can't hold momentum, then I'll trail out. How can we get the A1 indicator? Alex, shoot us a message on our website. We'll drop the link in the chat. Just speak to our team. Let them know you want the A1 momentum indicator for TradingView, and they'll get that to you. They'll give you the information you want. Just send us a direct message. Use this link right here. Chat with our team. You can get access to that. If you mean the other A1 indicator, the Edge Finder, you can also chat and ask them about the Edge Finder if you want our economic scanner. Again, just send us a direct message on our website. If you want to explore our tools for yourself, just head over to a1trading.com. We are a software company in the trading space. We build all sorts of stuff. Head over to a1trading.com and you can spend an hour if you want to going through all the different creations that we've worked on to help traders scan economic data, scan technicals more efficiently. With our tools, we allow traders to check out like economic data, of course, also the commitment of traders report. We have some pretty powerful stuff because we've got a wonderful team behind the scenes that works hard every day to make it better and better. So if you're looking for institutional trader level stuff for the average retail trader, check out a1trading.com. That's our website. You can explore our products. And at any point, if you have questions, right here in the bottom right hand, I've got some lovely people on our team who who are standing by to chat directly with you if you have any questions. We have real people who work every day with our traders to equip them with the best possible tools to improve their trading, whether it be from a fundamental analysis perspective, a technical basis perspective, looking at sentiment, whatever you need, we have tools for it. We also have partnerships with brokerages and prop firms, which will give you guys discounts. You can explore those on our website. We have brokers available where you can get sign-up bonuses, prop firms where you can get discounts. We have our own indicators that we've built. We have a signal service where you can see trades backed on real live brokerage accounts. Check out a1trading.com. You can explore all the stuff we've got available over there. That's it, guys. We're gonna shut down the stream. 5 hours since we started. That's a long stream. I got to go get some water because my throat's killing me. Thank you guys for hanging out with me. I appreciate everybody's great questions and involvement. Hope you have a great rest of your trading day. We'll see you back tomorrow.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.